Released for the market too. We got numbers from Holcim, the construction business. They've revealed some of the financials around their US spin-off and also sounding quite upbeat about M&A opportunities and about the state of the US market and the US economy. So an interesting conversation there, Guy.
Do you buy the dip into a weekend? That's an interesting trade, isn't it? It'd be interesting to see how the market fares with that one. We're about to see the answer, certainly at the beginning of the Friday trade here in Europe. It's time for the opening trade. Let's show you some numbers. We're expecting some negativity. Remember, next week's a huge week as well. You've got a potential government shutdown on deck. You've plus also got the Chinese story to focus on as well with the MPC. So the FTSE's down by 0.2%. IAG is going to be a big feature of that market. Wow, has that stock had a ride recently to the upside. Stock 600 is down by 0.3%. We're expecting more downside in these markets this morning at an index level. Single stock story could be quite interesting. There could be some real divergence that you're going to see this morning. Could take a while, though, to get some of the main markets open. The DAX in particular, I think maybe takes a few minutes this morning. A little longer than usual, Chrissy.
Absolutely. We're going to keep an eye on how all those shake out. But the early reads from the Stock 600 moves is that tech is not your friend today. ASML, Schneider Electric are your downside mover. You're seeing some extra pain in the chip sector as well. Joe Easton had mentioned this kind of move that we had seen when it comes to the read-through. Some of what we saw in the Philly Semiconductor Index yesterday as well over in the States. But that seems to be what's dragging this market down. You've got a little banking down there on the downside. You have a little bit of actually yesterday's outperformers also pulling back in this morning's market.
Yeah, so real weakness in the technology sector. It's interesting that, we had the NVIDIA numbers to price in yesterday, but then NVIDIA was really weak in session, weaker in session than it had been in after hours, in fact, yesterday. And so perhaps that adds some extra downside. So we are seeing some weakness. Add to that the tariff story, of course. But really, nearly all sectors are in negative territory this morning. Only two are higher, and that is utilities and telecoms, the classic defensive, but they're not up by much. Technology, the worst performer. Basic resources also looking pretty weak this morning. So we see the likes of Antofagasta, Rio Tinto, Glencore, all down by more than 1%.
I haven't got a price in IAG yet. It's expected to open circa plus 5%, I think, on the back of its numbers. We'll talk to Luis Gallego in a few minutes' time, so we'll get his take on what is happening. But yeah, there's an index element to what we are seeing this morning in terms of the selling. ASML, LVMH, Novo, Schneider, SAP, all seeing some weakness. So it's tech and luxury. There's a few pharma stocks being thrown into the mix as well. The breadth is interesting. You've got 450 stocks down. You've got 114 up. So there's definitely a negative bias, a big negative bias in terms of the downside on the markets. But banks are doing relatively well. Some of the performers this morning, though, are the names that we've seen posting numbers. Holcim in particular posting some decent gains this morning. In a market that is down sharply, it's up by 1.23%. So not a bad performance relative to expectations there.
Absolutely. Certainly something we're going to keep an eye on. We still have our eye on the DAX as well, whether or not that underperformance is going to show up as well. Let's bring in Laura Cooper, Head of Macro Credit and Global Investment Strategist over at Naveen. Laura, pleasure to have you on the program. And you picked quite the day to do it because we're trying to figure out what the pattern is here. I mean, we tend to see a little bit of a sell-off at the open on Fridays going into the weekend. How much of this is fundamental? How much of this is positioning?
I mean, I certainly think there's an element of positioning in this, given kind of these key risks that we're facing around tariff uncertainty. Do investors want to hold risk heading into the weekend, as you mentioned? But I think this is not an environment for de-risking. Perhaps it's just a case of finding those hedges to protect more of that downside. Because as you mentioned, that March 4th tariff deadline is looming, and we did see markets react quite strongly on the back of that yesterday.
Do you own it in going into the weekend? And I ask this because so many guests around our table come on and say, the tariff risk is priced in. We know this was coming. This was part of the Trump trade. How much of that is true?
I think it's about being very selective in your exposures in these backdrops. I mean, yes, we could argue that 25% tariff coming through on Mexico and Canada, perhaps that's just a negotiating tactic. It's going to kind of have some kind of a deal or a delay. And even if it is imposed, perhaps it's going to be for a very short amount of time. Maybe markets are focusing on that China 10% tariff, the additional there. I think that was what was most surprising to markets, and perhaps that does warrant a bit more caution heading into next week.
Do I take less risk, though, in this environment?
Not necessarily, because if we take a step back and look at the fundamental story, the U.S. economy, yes, we're seeing cracks in that exceptionalism narrative, but overall the fundamentals still remain strong. The labor market is tight. Wages are decelerating. We are seeing signs, so long as this uncertainty around policies continues to persist, that is feeding into consumer sentiment. That's the key risk that we're watching for at this juncture, but not enough to materially shake our expectation that the U.S. economy can maintain its resilience this year.
Maintain its resilience, but what is it that gets stocks higher from here?
That's a great question. I mean, I struggle to see what the catalyst really could be at this juncture, but I think it's about how you position. So are you going to take more of that broadening rotation within U.S. equities? Perhaps, given the valuation standpoint, if we are seeing quite an attractive, still fundamental growth backdrop. And as well, credit. I think credit is quite an ample opportunities existing there, given this backdrop of, higher for longer yield. If we see this tariff come through.
Any turn in the credit cycle? There's no...
I think at this point, we are going to see modest widening in spreads. That's going to create more opportunities for re-entry points. But this is a backdrop where we look at the earnings picture, we look at cash flows, we look at defaults, is still projected to be quite low. There's not that exogenous shock to the market that we think is going to prompt a material turn in that cycle, as you mentioned.
And so, Laura, I just wanted to probe a little more on your expectations around inflation in the United States, because we've had, I found this, I've got a chart actually to show, which I think is really fascinating. And this is not economists and their expectations of inflation, but this is voters in the United States. And voters in the US have completely different perspectives and perceptions of where inflation is going to go based on their politics. And I wonder if that indecision is filtering through to the markets community. To what extent are people unclear about how Trump's policies are going to create inflation or not?
And I think that's a key risk that markets are trying to grapple with. What's been interesting is we've actually seen those inflation expectations on market-based measures come off quite meaningfully over the past few sessions. We did have that University of Michigan inflation gauge that did come in quite hotter. There was some methodology issues around that. So I think overall, when we think about the outlook for inflation, yes, there are the risks around tariffs coming through, but we are still in an environment where we're probably going to see more of that inflation progress persist through the end of the year, getting to about that 2.5% mark on that core PCE gauge. But what matters most to the Fed, and Chair Powell has alluded to this, is the fact that inflation expectations remain anchored. That in and of itself can facilitate this disinflation trend without needing that slack in the economy. So that suggests they're going to keep rates in this restrictive territory to kind of have that inflation on track.
Okay, so that's the inflation side of things. And do you see any slack then developing in the US economy? You sound quite bullish on it, I suppose, but there has been this narrative developing this week. Well, two different theories about why we've seen yields coming down of late. One is that people are suddenly concerned about growth, and the other that people are suddenly convinced by Trump and Musk and Bessent and what they're doing around treasuries. I'm not sure which one you subscribe to, but are you nervous about growth in the US?
I think there's a degree of caution that is warranted. I mean, we saw investors really pile into that U.S. exceptionalism story. And yes, that still persists, but we are seeing signs of a moderation in growth backdrop. And I think that's what's getting investors a bit more nervous when we see this degree of policy uncertainty. It's not clear what's coming through on the tariff front, on the tax fronts, on the immigration front. All of this confluence of factors is feeding into that confidence channel, and that in turn could prompt a curtailment of that consumer spending, which has really been that pillar of growth for the U.S. economy. So it's the policy uncertainty that we're really watching for going forward.
You talked about the consumer confidence, some of the methodology there as well. We got initial jobless claims yesterday that came in a little hotter than expected in the survey. Not enormously, but just a little bit hotter. There is a question to your point of that policy uncertainty when it comes to things like layoffs, for example, from the federal government, when that's going to show up in the data. The economic impact of the LA fires, even the Hawaii fires, took a little bit to actually show up in the data as well. When it comes to some of that policy uncertainty, does this change the gauge of data that you're watching to trade?
I think we are watching more of those kind of survey data, kind of those leading economic gauges. Yes, we can rely on the payrolls print, which are still exceptionally strong, above 230,000 on that 3-month moving average. But yes, we want to find more of those timely gauges that capture kind of the sentiment on the ground, what those layoffs are coming through. A key trend that we saw in the recent earnings season was that layoffs were mentioned many times relative to previous seasons. So we do think that is going to have ripple effects in the labor market. I think the question, though, we're facing is, how much can the stock sell off before we see maybe a pivot coming through from the U.S. administration? Because previously in the administration...
So there is a Trump put. Do you think there's a Trump put?
I think that's the key question facing markets. I think the strike price this time around is lower than last time.
Okay.
But
what do you think it is?
How much more? No. It's about finding hedging opportunities to protect that downside.
Okay. I'm not sure the White House knows where it is. They just maybe know when the moment comes.
No, is it kind of 55? Is it 50? I don't know. Anyway, Laura's not going to give you an answer on that one, understandably. Laura, great to see you. Thank you for joining us on a Friday. Laura Cooper, Head of Macro Credit and Global Investment Strategist, joining us from Nuveen. Let's take a quick look at the core six, figure out what is happening there. There's quite a lot of negativity in the market this morning. As Anna's already pointed out, you are certainly seeing some of the tech stocks under significant pressure. As you can see, ASML is down by 3.5%, but all of this group are negative this morning. If you're looking for maybe a more defensive end to the market, look at Nestle, only down by 0.1%. Let's dig into some of the other stock stories. I see that IAG has now opened. Let's get some details with Joe.
So IAG is a decent gainer today, Guy. We're up around 3% at the open of trading. Now we're already up 15% year to date for a stock that's now gained 130% over the past year. They have got that buyback around €1 billion and also the jump in the profit, lifting that stock once again, boosting all of those buy-rated analysts we've got on that one. So a big gainer for the London and Spanish-listed airline today. Then in terms of the chips weakness, as expected, we're seeing ASML, ASMI, ST Micro, Infineon, all of them extending those declines that we saw yesterday. As we said earlier, we did see weakness in the US session, feeding through into Asia overnight, and now back into Europe once again. Lots of red on that screen. Then another sector seeing some red is over in the chem space. We got BASF down around 3% at the moment. They've got an update from the German firm. They're actually linked to the auto sector because they're saying that their coatings business, which supplies into cars, is actually the weak area, and that's why we've also got Valeo on the screen here, because the car parts maker cutting its guidance once again in France. Now, a couple of traders today were saying they thought a lot of that was priced in, but clearly not. We're down 8% at the moment for Valeo in France. Another weak day for that stock. A couple of profit warnings recently from them. Then in the cement space, seeing that one gaining at 1.6%. Now, bear in mind, that is a massive company. It's around a 50 billion market cap, so the 1.6% gain in this down market is actually pretty impressive for the company. That is, of course, looking to also spin out part of their North American business as well. That's the key thing. But that is a decent outperformance given the red that we're seeing on this market today. Another stock hit hard in France is Teleperformance. Take a look at that one. We're down 15% almost. This is the call center company. It's been hit by worries about AI, potentially AI replacing people in call centers. This is the worry on that one. And we are seeing weakness in the margins. They've downgraded that once again. And that one hit hard in France, down another 15%. Heavy losses over the past year for that one. And finally, a broker move, a big impact from Bank of America downgrading Logitech, which makes all of the headsets and keyboards that we use around the office, and that one is downgraded on its valuation. And also weakness, Bank of America downgrading its earnings forecast for the company and saying the valuation is too punchy. Take a look at that. Bank of America analyst feeling pretty good for himself this morning as he sends the stock down 9% for Logitech in Zurich this morning.
Okay, Joe, thank you very much. Joe Easton from our equities team on computer peripherals and other things. So a European session that is negative, down by 0.9% on the stock 600. Something that is bucking that trend, though. The IAG share price is higher this morning after a buyback announcement and a healthy profit beat. We'll speak exclusively with the IAG CEO. That conversation with Luis Gallego is coming up next. This is Bloomberg.
carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. Friday, 28th of February, and the European session is a negative one, as we have perhaps come to expect on Fridays, but down by 0.8% on the stock 600, once again spooked by a lack of clarity on the tariff agenda from the White House. So the talk overnight is of another 10% tariff going on China and a commitment to, as perhaps expected, next week implement those tariffs that had been suspended on Mexico and Canada. So those things, plus negativity around technology, basic resources are also weaker, all of that weighing on stocks this morning. Guy, let's go to the earnings story.
One stock that is not being weighed upon this morning is IAG. Excuse the pun, it is definitely flying higher. The company, as you can see, up 4.5% in a falling market. So an impressive performance being generated by the stock. It's had an impressive year. The stock is up significantly. And the question now is, does that continue into next year? This morning, quarterly profit beat analyst estimates. We've got a strong demand story, particularly in the leisure space. And it has announced a buyback of 1 billion euros. Joining us now exclusively is the IAG CEO, Luis Gallego. Luis, good morning. Thank you very much indeed for your time today. These numbers are being greeted by the market very, very warmly. The market likes what it's liking what it hears from IAG this morning. The stock has risen really sharply in 2024. Is there enough momentum in the business to carry you into 2025 to keep the share price doing what it's doing at the moment, which, as I say, is flying higher?
Yes, good morning. Yes, I think we continue seeing a very strong customer demand. What we see for the H1 is very positive. North Atlantic had a very strong performance in the last quarter of 2024, and we continue seeing the same behavior for the first half of the year. South Atlantic is also doing very well, and Europe, that is our third more important market, is also working well. So we don't see any weakness, and we don't expect that this year is going to have a very strong surprise.
Luis, load factors are very, very high. They're in the mid-80s. You're filling the aeroplanes at the moment quite nicely. Are you supply constrained at the moment? If you had more airplanes, could you fill them?
Yes, I think there is a lack of capacity in the market. The demand, as I said before, is very strong. We are managing the fleet, taking actions to minimize the delays that we are having from Airbus and from Boeing. But in 2024, we expected 20 aircraft, and we received 19, so only one 787 moved to 2025. For 2025, we are expecting 26 new aircraft. Maybe we can have some delays. There are some delays in the Airbus narrow body and wide body fleet, and also you know that Boeing is still trying to recover the production that they had previously. So we expect now the first 777X for 2027. But I think we are managing the situation, although we would like to grow more.
Luis, good morning. It's Anna here. That's one way of growing, getting more aircraft. Another way to grow is, of course, to add other businesses to your lineup. Luis, can I ask you about your intentions in Portugal, TAP or TAP? A lot of people focus on the future of that airline and your interest perhaps in it. Can you tell us anything about the timing of the conversations that you're having there?
Yes, I think we are waiting to the output of the process that they started. We think that in March we are going to have more information. We always said that TAP can be a very good business to develop in the IAG group, but we need to see the conditions of the privatization. We know that they are having talks internally, and we'll see if we can be interested or not.
And what is the attraction there? Is it all about Brazil, or is it about the substantial Western European part of their business?
I think we can do in Lisbon, or we can follow the same strategy that we have followed, for example, with Dublin and London, and to have a dual hub strategy in the south of Europe, in the same way we have a dual hub strategy in the north of Europe. So Madrid and Lisbon, they are very complementary hubs. It's true that Brazil is a market where we don't have a lot of capacity, and TAP will be very good for us, but also they operate to other markets like North America and also former colonies in Africa. So I think it's an interesting business that I am sure we can develop, and to have a company in the range of profitability that we have the rest of airlines in the group.
Luis, it's Creedy in London. Let's talk about another market that is potentially coming back online. There's a question of whether Ukrainian and Russian airspace could be reopening. Does that present an opportunity for someone like you?
Yes, for sure. I think the several opportunities, I think, linked to that. First of all, if the airspace is open, I think we are going to have a better ATC environment that, you know, we have suffered. Last summer was the second worst summer if we look at the delays of ATC, and this is for several reasons, but one of them is that part of airspace is closed because of the Ukraine situation, and that's something that can be improved. Another thing is the flights to Asia. Previous to COVID, 8% of our capacity was in Asia. Now is around half of that. And one of the reasons is that to fly there, we need 2-3 hours more, and it doesn't make sense when you have to compete with other airlines that they can fly through Russia. So as soon as the airspace is open, we will reconsider to resume the operations to some destinations that we needed to cut.
Luis, what kind of additional assurances do you need for that? If you do get that peace deal, or you do get that reopening of the airspace, what else is a green light for you to resume those operations?
No, I think we need to be sure that to fly there is going to be safe. I think it's not only the right to overfly. It's also if you have, for example, a technical incident and you need to land in Russia. So we need to evaluate that, but we have a extraordinary team that they are going to look at that. And as soon as it's possible, and when we have also availability of aircraft, that we said before that there is a lack of aircraft available, I think we will resume the operation.
Luis, you talk about a lack of aircraft. Another thing that the aviation industry is lacking right now is sustainable aviation fuel, SAF. We've started to see the blending coming in. The mandates are now being applied. SAF remains incredibly expensive, and there simply is not enough of it. Do you think the mandates are going to have to be watered down? Do you think the targets are realistic at the moment? Do you think that actually some of these issues are going to be harder to resolve and going to take longer to resolve in terms of fixing the supply chain around SAF?
I think mandates are not enough in order to produce SAF. So this year we have a 2% mandate, and in some way this year is going to be easy because we can achieve that amount. But the problem is going to be the future, as the mandates are going to be higher. So we need production of SAF, and the mandates are not working in isolation. So that's the reason we are pushing here, for example, in UK, a revenue certainty mechanism in order to have enough investment to produce SAF, because the problem is we have a lot of demand, but we don't have supply, and the price of SAF is still very high.
Yeah, it's 2 to 4 times higher.
Yes.
How much does that need to come down in order to make this realistic? What do you think is a reasonable price? Because this is the debate within the industry. The big oil companies say we're not going to produce it because the airlines aren't willing to pay the price, and the airlines saying, well, you're not producing it, so we can't do anything about that. So how does this get changed? What do you think needs to happen now? Because it's getting really important. The price is still too high. Consumers won't pay that. So you talk about the kind of the price guarantee mechanism. How does that change?
I think what is also very important is to have a level playing field, because what it doesn't make sense is that in Europe we have mandates, but in other parts of the world they don't have mandates, because at the end aviation is a global business, and we need to have a common playing field. So I think SAF is a solution that we have now in place. I think it has to be much more affordable, because at the end, the excess of price that we are paying, we need to transfer to the consumers, and we don't want at the end that fly is going to be a right only for the rich people. I think all that we have seen in the last 25 years has been positive to have more people flying, and this lack of SAF can go in the other direction, that is going to be very expensive to fly.
Luis, always a pleasure. The shares are up nicely this morning. The numbers are going down well. IAG's CEO, Luis Gallego.
Let's talk about another earnings report we found out this morning. Shares in the French car parts maker Valeo are moving lower this morning after reporting their earnings. We will be speaking exclusively to the CEO of that business, Christophe Perriat. That conversation coming up next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back. Let's take a look at where we are in terms of the trade. We're 30 minutes into the session. We're down by 0.5% here in Europe at the moment. In some ways, you could argue that relative to expectations, that is not a bad performance. It feels like a sort of holding pattern the Europe's in this morning. To a certain extent, we got some of this price yesterday. We already were kind of aware of some of the risks. And going into the weekend, I think people are just sitting tight.
Absolutely. A little bit of risk off, a little bit of catch up as well. And then, of course, we don't really know what not only the geopolitics that are coming out of the United States are going to bring, but, of course, how that's going to shake up in Europe. Remember, we're still dealing with a lot of geopolitics and election fallout here in Europe as well. Let's check in on, however, one company that's catching our eye this morning, specifically Valeo. The shares are down about 10% after their earnings release. Now, look, their fourth quarter revenue did come in higher. I'm looking at a $5.41 billion number. The estimate there was $5.3 billion. It has boosted their full year results a little bit higher, but it seems to have cut its revenue forecast for the entire year. That seems to be what's weighing on shares to the tune of about 10% this morning. The CEO, I'm pleased to say, Christophe Périllat, joins us now for an exclusive conversation. Christophe, a pleasure to have you on this program. We thank you so much. Can you just walk us through some of these numbers that we're getting, especially when it comes to that revenue forecast? Seems like that's what the market is responding to.
Well, the market of automotive has been quite low and quite uncertain in 2024. There's been market stagnation. There's been, some customers going up, some customers going down. As you know, BYD going up, Stellantis going down, for instance. There's been quite a lot of start of production of new cars as well being postponed, from 24 to a later time. So this has impacted our revenues. At the end of the day, we have revenues at 21.5 billion euros. We were expecting more at the beginning of the year. But nevertheless, what is important is that despite this uncertain market, despite all the challenges in the automotive industry that you're well aware of, we've been able to increase our profitability in 24, as we did in 22 and 23. So it's now the third year in a row where we demonstrate that we're overcoming these challenges of the automotive industry and managing to improve our profitability.
Well, Christophe, speaking of that improvement, how is your manufacturing ability perhaps changing around not only addressing some of the challenges that you just mentioned, but perhaps an expectation or at least some comments coming from fiscal governments around Europe about a big kind of fiscal spend that's coming down the pipeline? How does that change your strategy around your manufacturing capacity?
Well, we have been adjusting our manufacturing capacity. We've been deciding for some reorganization of the company. We've been closing down a few plants here or there. I mean, this is not things that you like to do, but they are things that are necessary to be done. We've done that. We took it in our net result in 2024. But we're making this adjustment in our manufacturing footprint, and we'll continue to do it when and if necessary, of course.
Christoph, we are talking about a lot of geopolitical volatility at the moment and a lot of economic volatility as reflected in threats of tariffs, perhaps the reality of tariffs in some parts of the world. I wonder how you're, as a business, planning around tariffs when it's very difficult to plan around things you can't see or don't know about yet. But what are your expectations for how this will impact your business?
Well, I mean, absolutely. It's extremely difficult at this point of time to know if, when, and how such tariffs might be implemented. The situation is quite complex because even if you try to find out and understand which tariffs will be implemented, you don't know what kind of retaliations will happen in other countries. So it's a very complex environment, and we are an industrial company. We have more than 170 plants, in the world. There's no way our manufacturing footprint would change, in a night shift, or will even change in a few weeks or in a few months. It's going to take years, to change any kind of manufacturing footprint. As a consequence, we have to make things as simple as, in fact, they are. Whatever cost Valeo will have to pay if tariffs are implemented, we'll seek and we'll get 100% compensation from our customers. Because there's no other option, because that's the way to go. Because the whole automotive industry is going to do that at the same time. So we have already communicated to our customers around the world new price list, that will be implemented as soon as any tariff would be implemented. That's the way the industry is going to work.
So it's as simple as that, is it, Christoph? That you are confronted with tariffs and you pass that on to customers, sort of euro cent for euro cent. Your business does not take it on the margin at all. Customers will pay. What kind of response have you had from customers on that?
Well, I think we've been talking already to our customers in the last weeks, in the last months about this. I think they understand. They know what kind of margins the automotive industry is working with. They know, the margins that the automotive suppliers are making. They are very much aware of our manufacturing costs. We have all kind of discussions with our customers on breakdowns. We've been going through the inflation waves. We've been disclosing, the detail of our costs. All this is on the table. All this is absolutely well known. So I think there's some open discussions with our customers on the topic. They know that there's no other option than to push up the cost from the supply base to the OEMs in the auto industry.
Christoph, good morning. It's Guy. Some in this industry have decided that they are going to stick with ICE engines and hybrid engines longer than they originally anticipated. Do you think others in the industry will make that similar decision as well? Do you think ultimately the current targets set by governments, set by the EU, are too strict and will need to be changed?
Well, the world has to decarbonize, that's for sure. The mobility has to decarbonize, and obviously electrification in the mobility sector is the way to decarbonize the mobility. Now, looking into 2035 specifically in Europe, as you know, there's a strategic dialogue that has been opened by the European Commission. I will be in Brussels, next Monday to meet with the president of the European Commission in a meeting to discuss about these topics. As far as Valeo is concerned, we are very pragmatic. We see that there's some resistance from the customer base at the end of the day on pure BEV. And for instance, the introduction of some dose, some volumes of plug-in hybrid, for instance, might be a good complement to the existing policy, just to take into account what at the end of the day, you and the customer base wants to buy.
So you think hybrids should be included? Is that the message I'm hearing?
Yeah, absolutely. I think that, enlarging the strict definition that today is part of the European agenda, it means 1% BEV, because at the end of the day, this is what it is. But including, a plug-in hybrid or qualifying plug-in hybrid as being possible, allowed beyond 2035 would make sense.
Christoph, great to catch up.
And obviously, I'm talking about plug-in hybrid with enough range.
Yep.
Thank you.
No, yeah, okay. Fair enough. Yep, no, totally. Christoph, we'll leave it there. Thank you very much. Christoph Perla, the CEO of Valio. Thank you very much indeed.
Interesting corporate conversation yesterday. Interesting political conversations taking place in Washington yesterday. Yesterday. President Trump says that Britain could avoid tariffs if a trade deal is reached and said he would restart long-stalled negotiations with the UK. This, as British Prime Minister Keir Starmer heralded a new economic deal between the two countries.
The United Kingdom is a wonderful country that I know very well.
Our countries have been bound together for a very long time now. The closest alliance, I think, of any two countries when it comes to prosperity and security. Our trade, obviously, is fair and balanced, and in fact, you've got a bit of a surplus, so we're in a different position there. And obviously, we've contributed hugely in relation to Ukraine, and taken together with Europe, there's about 50%.
It'll work out.
Does that mean there won't be any sanctions on the UK then?
Well, I have to take a look. You know, the British have been incredible soldiers, incredible military, and they can take care of themselves. But if they need help, I'll always be with the British, okay? I'll always be with them. If you want peace, you have to talk, both sides. As I discussed with Prime Minister Starmer, the next step we're making is toward a very achievable ceasefire.
It can't be peace that rewards the aggressor or that gives encouragement to regimes like Iran. We agree history must be on the side of the peacemaker, not the invader.
I think we'll have two deals. I think we'll have a deal on ending the war, and I think we're going to end up with a great trade deal with you.
Some of the highlights between President Trump and Prime Minister Keir Starmer just yesterday in Washington. Bloomberg's Lizzie Burden, of course, listening to all the details and can take us through what we learned. Lizzie, we'll get back to the UK-US trade deal shortly, because that's an important development coming out of this visit. But there was also a lot of news flow around Ukraine, and so what was and was not achieved there, I suppose, is the question.
Yeah, I mean, for all of the wooing that Starmer the Charmer tried to do, and you saw it there in terms of trying to invite Donald Trump to the UK for a second unprecedented state visit. He gave him a handwritten letter from the King, which Trump accepted on the spot. It comes down to that #1 demand on Ukraine, which of course is for a US backstop for British troops in a peacekeeping force. In other words, air support, intel as well. And actually Trump's response was very coy when it came to that. He said that he doesn't want to talk about peacekeeping until a deal is done.
Too soon to have that conversation.
Exactly. It's kind of out of sync. Well, why are you doing the meetings in that order, you might ask? He says that having US companies on the ground mining for rare earths in Ukraine is enough of a deterrent to Putin, and that he's confident Putin isn't going to renege on a deal. Well, Europe's not. Right? There was a bit of a melting of the ice cap, shall we say, when it came to Zelensky. Just take a listen to what he had to say about him.
Mr. President, do you still think that Mr. Zelensky is a dictator?
Did I say that? I can't believe I said that. Next question.
And indeed, the British papers trying to take the hope from the ambiguity off the back of that.
So let's just talk about where we are. It's often referred to as a special relationship. It was fascinating to hear Trump talk about the idea of a trade deal. Is that actually what the British want from this special relationship? Do they want something as broad as that, or do they want something maybe a little bit more specific?
Well, I think what the British do not want are tariffs. And, of course, we're looking at Europe facing 25% tariffs on goods, including autos. It's a relief, especially for UK growth, Starmer's top priority, not to be facing those tariffs for now. It makes the relationship with Europe very tricky, given that Starmer is trying to repair ties with Brussels post-Brexit. And as you suggest, we have to wonder what's going to be the terms of that trade deal. There was another moment in this press conference where J.D. Vance spoke up, talking about free speech and the state of it in Britain. And that was the one moment where Starmer actually chose to correct the US side, doing a Macron. So is there going to be a demand for special terms for social media giants? You have to wonder. But in terms of the state of the special relationship, it is hopeful that you've got these hints on a US-UK trade deal and as well on Chagos. So Trump signalling that he's going to back Britain's position there. It'll be interesting this weekend after Zelensky's had his own trip to Washington for all of these European leaders, including Zelensky, we just reported, when they convene in the UK to compare their notes on the new relationship and the outcome for Ukraine.
Defense, of course, a key piece of that agenda. And again, also aside from the tech story that we know JD Vance talked about and the farm goods as well, agricultural products there. Bloomberg's Lizzie Burton walking us through the impact on that special relationship.
Coming up on the programme, we look ahead to the 97th Academy Awards this weekend and preview who could be taking away the coveted Oscars as Hollywood prepares for the biggest event in show business. More next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome back to the opening trade, 8:47 here in London, Friday the 28th of February, and it's a negative session, but not down as much as we were, though, is probably the headline here. The CAC 40 and the Xetra DAX getting the worst of the losses, down 6/0.7%. But we were down lower earlier on. We're waiting for key data then, Chrissy out of the United States, waiting for key geopolitical developments today in Washington and then in London over the weekend.
Absolutely. Plenty of economic data to keep us entertained, keep us on watch until then. We did, of course, get the French CPI numbers at 10 a.m. UK time. We're going to get the Italian CPI numbers as well. But throughout the morning, some of the regional data coming out of Germany. But the big one you want to watch is at 1 p.m. UK time when we get that German CPI. So that's going to be a crucial one. But then the data deluge continues about 30 minutes later, 1:30 p.m. UK time. It's that US PCE story. You have personal income, personal spending figures as well. Bloomberg's Valerie Teitel is here to walk us through it. I know we're supposed to pay attention to PCE, but could the income and spending numbers be what the market reacts to more?
Look, I think right now the market is reacting way more to what's coming out of Trump in terms of tariffs. But this PCE number, it is what the Fed looks at, so the market does look at it as well. It's expected to show a tick up from the December's number, so from 0.2% to 0.3. But again, let's hope that this print doesn't have any whiff of anything hot, because we want to have a stable equity market ahead of this weekend. We know there's going to be rife with tariff negotiations. That March 4th date really staring us down the barrel and adding to the pressure more that he's just thrown in this extra tariff on China.
What's the market more worried about right now? Growth or inflation, though?
No, recently it's definitely been growth. I mean, the recent
data.
When
you say recently, the last few days?
Last 2 weeks. I think ever since that retail sales miss, the biggest miss in 2 years, the market's flipped to be more sensitive about any growth upsets. But, the next big one could maybe be a shock from a retaliation when it comes to China. Because the thing about this additional 10% on China that he's just thrown in there is it's not really clear. Is the Trump administration even talking with China right now? We know he's already talking to Trudeau. He's talking to the Mexican government about getting what he wants out of the 25% tariff threat. But it's unclear whether the Trump administration is in any direct negotiations when it comes to China and reducing the trade balance there.
Can I just throw something else in? Government shutdown. How's the market feeling about that? It's just another massive risk, and people are talking about a long shutdown potentially here as well.
Honestly, I think for the market, it's too far away. We already have the tariff negotiations to take place, given the reciprocal tariffs on April 2nd. I just think there's too much for the market to focus on in terms of trade negotiations to be worried about that right now, because the thing that market has a very hard time pricing in these brinkmanship episodes until they actually happen. And with that one maybe the farthest away, I think that the market has taken its eye off of that at the moment.
But you said those growth concerns have come up in the last 2 weeks, basically in the same move that we've seen, a 40 basis point move in the 10-year. How low can that yield go?
Well, look, when the Treasury Secretary tells you that he thinks Trump policies are going to move yields lower, they move lower. So I wouldn't really want to stand in the way of that if you have the biggest seller of Treasuries calling for a Treasury rally based on a government-led policy. But look, we do have some more economic data next week to come, one of them being the big jobs print next Friday. We also have ISM services and manufacturing. If we do see another miss when it comes to a services indicator, I expect Treasuries to be bid. But it's interesting to see, Critty, that from the equity side yesterday, Treasuries were seen as the risk-off hedge, and that's not always been the case. So we are seeing that kind of correlation between equities lower, bond yields lower, resume at the moment.
Valerie, thank you very much indeed. Valerie, walking us through the markets into this weekend. Talking of the weekend, critically, no rugby, so there are other things that you can focus on.
There's other sport here, but apparently it's not rugby.
It's not rugby. It's not rugby. Well, there is rugby, but not international rugby. Anyway, Milan Fashion Week, worth paying attention to. Nordic Carnivals, you want to pay attention to that. That could be amazing. You've got the Oranges battle.
Tell us more about that, Guy.
Go on. Make me do that.
Or maybe the England-South Africa cricket.
There's cricket. We can focus on the cricket. We can talk about some sports that is worth paying attention to, though I don't actually want to spend too much time talking about English cricket
over
right
the
now.
Battle of the Oranges. Come on.
Yeah. Maybe we'll do some more research on that.
Do you want to? I haven't done enough research on the Battle of the Oranges, and I also probably haven't done enough research
on the Oscars?
On the Oscars as well.
Let's move to that, though, because as we've been mentioning, preparations are in full swing for the 97th Academy Awards this weekend in Hollywood. Joining us for what to expect is Bloomberg's Daybreak editor, Mark Perrier, Daybreak editor and aficionado internally on the Oscars. Big enthusiast, of course, for all things glitz and glamour. Mark, tell us a little about, though, the mood of this event, because before we get excited about who might win and all of the glamour that goes along with this, there's the serious business of this being the first Oscars since the fire, and perhaps that weighs on the mood a little.
Absolutely, and the organizers, I think, have to strike the right balance, being respectful of the moment, but also providing the audience with the glitz and entertainment that we always expect. They have indicated that they'll have firefighters involved, or at least they'll salute them on stage. Conan O'Brien, the host, has a very tough job. ahead. And he's also indicated he'll be very respectful of the moment. The writers on this show are so nimble and smart. They'll be writing up the material right up until it actually starts and through the show, reading the temperature.
To keep it current.
Can we go to the fun stuff now?
Yes.
Actually, because this is, of course, a very big deal. I think in years previous, there's been a thought of whether people are even watching the Oscars, whether they even matter at the end of the day. What do you think?
Some people do, some people don't. Certainly the viewership has come down over the years, but I think that's more reflective of viewer habits. Social media plays a big part now. I think they do push that. But the Oscars are the Oscars. It's the biggest event in the industry. It's one of the few things that brings the world together. Everyone loves the movies.
The movies industry has changed, though, dramatically over the last few years. Big streaming companies, now a big part of the landscape, yet never really reflected in the Oscars. When is this the year that changes?
It was supposed to change. Netflix has been nominated, I believe, 10 times for Best Picture. Hasn't won yet. Their biggest chance this year was Emilia Perez. Unfortunately, the chances have fallen because of controversies surrounding one of its leads. They're still hunting for the Best Picture Oscar. It's not happening this year.
Okay, so let's get to the nitty gritty here then, Mark, about who's actually going to win. So you mentioned Emilia Perez, and that was, that got a lot of nominations, didn't it? But now things have changed. The narrative around that certainly seems to have evolved. What about others then in the mix? I mean, Anora's done well in other award ceremonies. The Brutalist is just extremely long, so I have not seen that.
It's very long.
I struggle to stay awake that long. Your thoughts? What's going to do well?
My picks, Best Picture will be Anora. It's just going in with the right momentum. Conclave could pull the upset. That would be my number 2 choice. My money is on Anora. Best Actor, Adrien Brody for The Brutalist. And Best Actress, Demi Moore, coming in with renewed momentum after winning at the SAG Awards. It'll cap her career, her comeback, and Hollywood loves a comeback.
Who's staying up for this?
You haven't even mentioned Wicked. Come on. Yeah. Come on, Mark.
It's on the list.
It's nominated.
They are performing songs, apparently. There's a medley of songs to take place on stage.
That's always Guy's favourite.
I will definitely stay up for that. Absolutely.
Sounds good. Bloomberg's Mark Perrier giving us everything we need to know about what's going on in Hollywood. We thank you so much. Let's get a quick check on these markets, though, because it is Friday. We did kick off the show with some fairly poor risk sentiment. Look at that risk sentiment has paired some of those losses, but still very much in the red. Stocks Europe 600 down about 0.6%. But you're seeing a similar story across the DAX, the CAC, and even the FTSE 100 as well, down about 0.3%. But this is a weekend story. This is a fundamental story. This is a positioning story. Do we see buying on Monday?
A lot of risk over the weekend. I mean, US futures look flat to positive, don't they? But there could be risk. I mean, some of it's geopolitical, which is difficult to match to markets, maybe. But a lot of developments around Ukraine could be anticipated over the weekend.
Bitcoin's trading with a 78 handle.
Yes.
And it has continued to fall throughout the session. It will trade over the weekend. We will continue to... that's still kind of... As you go through this weekend and you think about how you monitor risk, it's going to be fascinating to see how much lower that could go. 76, I think, is a key line in the sand as well, so people will be paying attention to some of those key levels as we approach Monday again.
You've got your eye on crypto. I've got my eye on Eurodollar because we're now back at a 103 handle, and I wonder if that kind of dropped to parity if we're talking about tariff conversations comes back on the agenda.
We spent a lot of time in South Africa this week, haven't we, at those G20 meetings. They've been ongoing. So on a programming note, I should tell you that we're going to be showing our monthly show, Next Africa. That is airing tonight. Our first episode of the year takes a deeper look into how President Trump's return is rattling the continent. So certainly don't miss that one. The markets then are weaker this Friday, waiting for PCE. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings stick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
European stocks slide as global equity sell-off continues after President Trump ratchets up tariff threats. Donald Trump says he will restart long-stalled trade talks with the UK after hosting the British Prime Minister. Plus, the U.S. president backtracks on calling Ukraine's president a dictator ahead of today's White House meeting with Volodymyr Zelensky. So there is quite a lot going on in the world of geopolitics. Let's also take a look at how the European markets are reacting to all of this. Now, we're seeing a little bit of pressure. You can see the DAX, the CAC, and the FTSE MIB are initially down some 0.4%. The FTSE down 0.2%. Again, U.S. President Donald Trump's latest pronouncements on trade tariffs seem to be draining investor appetite for riskier assets. So cross-asset, we're seeing a bit of a move as we look, of course, for euro, dollar, Bitcoin, and some of the currencies as well. Now, S&P futures gaining some 0.2%. The most interesting one right now is probably Bitcoin, 79,106. It's been plunging, extending declines from its January peak to over 25%. The dollar edging up, treasuries advanced, and again, the U.S. 10-year yield dropping to around 4.24. Now, we're also getting some data out of Germany. Germany's Brandenburg February CPI rising 2.3% year-on-year. Consumer prices rising 0.3% month-on-month. We also have Bavaria, and that consumer price index actually rising 0.4%. It's a complex, of course, situation when it comes to inflation and what the ECB does next. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China has threatened to hit back at Donald Trump's trade threats after the U.S. president unveiled additional 10% tariff on Chinese imports, raising the risk of tensions spiraling between the world's largest economies. The levies are set to take effect on Tuesday, one day before President Xi Jinping heads into the party's biggest political meeting of the year. So to talk politics, geopolitics, and what it means for the economy, joining us, Rosalind Matheson, our EMEA news director. Ros, thank you so much for being here. We'll talk about the economy in just a second, but when you look at what Trump has announced, again, a lot of question marks on when, if, and how these effects take place, but an additional 10% tariffs on China, what will the impact be?
Well, the impact could be quite immediate, but also the timing is really the interesting thing here, is announcing this further 10% tariff on China right before Xi Jinping. You were just noting the president of China is due to have their National People's Congress. It's like the biggest political meeting in China, where they're going to set out a lot of economic policies, including their bid to rebalance the economy much more towards the domestic side to sustain growth there. And so you're putting this in to that conversation. So what does that mean in terms of how that meeting goes? What does China come out of that meeting with? And do they decide that they now have to retaliate? Because what you saw with the first 10% was, if anything, quite a measured response from China. You had Xi Jinping saying, I still want to talk to Donald Trump, the US president. That call, by the way, has not happened yet and probably won't now before the NPC. But there was the idea that they were going to talk, they had a personal rapport, they could work things out, and that if anything, the US was going a bit softer on China than on other places, but that's kind of blown this a little bit out of the water.
Meanwhile, President Trump also said that he would restart this long-stalled negotiations on trade with the UK after meeting British Prime Minister Keir Starmer.
We're going to have a great trade agreement one way or the other. We're going to end up with a very good trade agreement for both countries, and we're working on that as we speak. I think we'll have the confines. I think we'll have something maybe even in terms of possibilities agreed to very shortly.
Our trading relationship is not just strong, it's fair, balanced and reciprocal.
I mean, the UK press is pretty much on a high. They keep on saying, you know, Keir Starmer got this, he won this. I mean, what more do we know about a possible trade deal?
Well, it's interesting because he does seem to have had a good meeting, but what did he actually come out of it with is the question, not necessarily what he wanted on Ukraine, for starters, but also on the trade side. What we're hearing is that the UK is talking about a very narrow trade deal focused very much around tech and AI. What Donald Trump would want, no doubt, is an all-encompassing, what he would call beautiful and huge trade deal. And it seems already that what the UK is intending to talk about is quite different from what the US is intending to talk about. So the prospect there for some kind of disagreement is quite significant. But for now, the UK does seem to have dodged a bullet on the trade front, and that's because naturally they have a different trade picture with the US than, say, Europe and other countries do. Perhaps the one benefit of Brexit is that the UK on its own looks a bit easier for Donald Trump to handle, but you know, the question is how long can that last? And when they really start the nitty-gritty of the trade conversation, the US is probably going to want more than the UK is willing to give.
So interesting. Roz, as always, thank you so much, Roz Matheson, there with the very latest on Donald Trump. Now, let's also bring in Claudio Irigoyen, head of global economics research at Bank of America. Claudio, thank you so much for joining us. I mean, there's a lot going on in economics with tariffs, inflation. I think you start your note by saying when confusion meets uncertainty. What are you most worried about?
Okay, so first of all, it's a pleasure to be here in London with you today, Francine. I think the difference between uncertainty and confusion is important because we can agree that we don't know whether Trump will impose tariffs or not, whether they will be permanent or not. We agree on that. That's uncertainty. But confusion means that even we agree on that, we might be confused or we have disagreement about the impact of those tariffs on the economy. Some people think that this is going to be recessionary for the U.S. Some people think it's going to be inflationary for the U.S. Some people think it's going to be stagflationary, so recession and inflation. And that creates confusion also from the point of view of the Fed, because it's not clear whether they should cut interest rates because it's a negative shock for the economy, hike interest rates because this is bad for inflation. We are seeing inflation expectations moving up already, but we are seeing also consumer confidence moving down. So that creates a lot of confusion.
And this, I mean, the market for me over the last maybe 3 weeks has changed a bit to concern about inflationary pressure to really, as you're saying, concern about a growth slowdown. How do you see the U.S. economy going?
The U.S. economy is still risk-adjusted, the best story out there. So if you compare the U.S. economy relative to Europe, relative to China, it's still a reasonably good story. Now, I think the markets are, given that I'm in London, I'm going to play with words, but we are probably approaching a distrust moment. In the sense that markets were thinking, well, Trump will not go that far with tariffs, will not go that far with immigration. But obviously, if you threat your partners, your trading partners, sometimes you have to deliver some of the threats in order to be credible. So what we're seeing overnight is, again, Trump going to Mexico and Canada and saying, I haven't seen enough progress. I want to try with 25% tariffs. Let's see if with tariffs on, you deliver on what we need.
So what do you think is priced in at the moment? Again, if there seems to be a belief, you're right, in the markets that he won't go as far as hurting equities or hurting bonds.
Yes.
Is that an underestimation? Because again, if you try and make an omelet, you're going to break things. And so inflation, again, are we going to import inflation because of tariffs, or could they have a deflationary pressure because of also what's happening in China?
I think in China we are having good news. I mean, I think the meeting between Jack Ma and President Xi was very well taken by the market. But on the other hand, we have, as you mentioned, consumption still very depressed and China exporting deflation to the rest of the world. Regarding tariffs, it's hard to determine whether a big chunk of the tariffs will be passed to consumer prices, how much is going to be absorbed through profit margins, and how much is going to be absorbed by the dollar appreciating. Some impact on prices there will be. Yeah. We are seeing, in some cases, consumers trying to front-run the increase in tariffs and buying goods. We are seeing that in the manufacturing sector. But probably we want to see both. We want to see a slowdown a little bit in economic activity and some pressure on inflation. Temporary, but still some pressure.
Claudio, what do you think the Fed does actually this year? And again, market expectations have been all over the place.
Yeah, we've been holding an out of consensus call on the Fed for a while that the Fed will not cut interest rates, because when there is so much uncertainty and it can go both ways, the option value of waiting, it's higher than ever. So the Fed will try to figure out the impact. Obviously, it's extremely important that inflation expectations remain anchored. As long as they remain anchored, they will probably remain on hold. If we are seeing a significant impact in economic activity and not so much pressure on prices, they might consider the cuts. We don't think we are there yet. And obviously, if the pressure is much more on prices rather than economic activity, they might consider some hikes. We are not there yet.
It's interesting. So we've been covering Doge, of course, trying to understand that the impact economically is still very difficult, for me to determine. But you're starting to have numbers on what kind of impact it would save the U.S. government.
Yes, I would say the following: the U.S. The deficit, the public sector deficit is 7.5 points of GDP. You're not going to fix that with Doge. Doge might create some savings here and there, but it's not the solution to the deficit. It's a more structural problem. And by the way, the deficit that you have is the counterpart to some extent of the current account deficit that you have. I think it's important to understand that you're not going to fix the current account deficit or the trade deficit with tariffs. It's a product of macroeconomic imbalances. It's a difference between savings and investment. The U.S. economy doesn't save enough, especially because of the public sector, and it's a very attractive destination of capital because risk-adjusted is the engine of growth of the world. So you have a lot of capital inflows that appreciates the dollar, and that creates the current account deficit that Trump is supposed to fix with bilateral negotiations with countries where the U.S. has a trade deficit. We don't think it's a solution.
But again, it's sold as a negotiating tactic, right? To get something back, and that's what we don't know. We don't know how these tariffs or threats are used.
Absolutely. We are on the camp that Trump will negotiate country-specific comprehensive packages involving trade, immigration, energy, defense spending, in the case of Europe. And Trump might impose tariffs tomorrow or Monday on Canada and Mexico. That doesn't mean that they will be permanent. Maybe Canada and Mexico deliver on what Trump wants, and therefore those tariffs will be reduced or eliminated. Remember, the supply chains are so integrated between the U.S., Canada, and Mexico that U.S. companies will be hurt. I don't think Trump wants that.
Claudio, thank you so much. Claudio Irigoyen there from Bank of America stays with us. We'll talk a lot more about Europe and some of the emerging markets next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
We're back with Claudio Irigoyen from Bank of America. Claudio, thank you so much for sticking around. We're talking a bit before about the U.S. economy, some of the quirks of what trade and tariffs do and inflation and all the like. Where does Europe sit in all of this?
Well, Europe will have to sit to negotiate also with Trump. Probably the negotiation, as I mentioned before, is going to be a comprehensive negotiation that will involve defense spending. Trump would like to spend less on defense, the U.S. to spend less on defense, and the rest of the world to spend more on defense, in particular Europe, and ideally buy the weapons or the inputs from the U.S. That would be probably in exchange of lower tariffs. But the negotiations will be bumpy. It doesn't mean that the threat will be no tariffs if you spend on defense. Maybe it's tariff first, and then you guys regroup and come with a proposal to counteract the tariffs. And Europe is in a very tough situation, obviously.
That's because of consumer spending. I mean, the economics, fundamentals at the moment were not great to start with.
It's not great. There are still a lot of challenges on the political front in France, in Germany with the new government. China is not doing well, and therefore is not buying as many manufacturing goods from Germany in particular, from Europe. China is entering into the auto market in Europe and competing with Germany. So that's a very important structural shock that is not going to go away, has nothing to do with Trump. And there is this issue of whether if Trump imposes more tariffs on China, maybe this 10% is not going to make a big deal in this sense, but if it goes really, really high, like a 40, 50%, China will have an incentive to sell goods to the rest of the world, and then Europe and other countries will impose tariffs on China. And then we are talking about a completely different game. This is going to be very bad for global growth.
That could come. I mean, what's the possibility of that? Is that like a 40% possibility or 20%?
I think it's not as high. I would say it's more the 20 than the 40. And the reason why is because if you approach that, you're going to have a huge correction in the stock market. And Trump will react to that. I think the limit to Trump policies are U.S. companies. And let's not forget that 40% of the revenues of the U.S. listed companies comes from the rest of the world. So global growth slowing down is not good for U.S. companies. And there is a very direct transmission channel between a correction in the stock market and consumer confidence in the U.S. So will Trump ignore that correction in the stock market? I would say no.
Claudio, is there one thing that we're underestimating? Whether it could be, AI and the impact on the economy, whether we're expecting too much or too little, but also if something happens with China, will some of the neighboring countries benefit from possible trade because it's changing the way partners deal with each other?
Yeah, there could be winners and losers. For instance, depending on the negotiations between the U.S. and China, countries like Brazil might end up benefiting, because if China imposes some type of tariffs on agricultural goods in the U.S., Brazil will sell more to China. As you mentioned, neighboring countries might benefit through the redirection of trade. But that's when it becomes more complicated, because the idea of universal tariffs is to try to avoid those triangling of trade. And this is when it comes really bad for global trade, because it will hurt consumer confidence globally for sure. There is no way out.
If there is something bad in the economy, where do you see it first?
In the U.S. economy, or
in general, actually, the global economy? Does it start with the U.S. consumer, or is there an indicator that you think would be, that where the alarm bells would go off? Yeah, I mean,
look, when I talk to CEOs of companies, I come from Dubai. We had our Global Investor Summit in Dubai, and I had the opportunity to talk to a lot of people. And when you talk to the CEOs of companies, they are, as I mentioned before, they are confused. And when you're confused, you stop investment decisions until you have a better understanding of how your relative prices will move. So it's too early to tell. I mean, the uncertainty escalated in the last month and a half or so, so we are not seeing yet on the hard data, but soft data is what we need to look at. The surveys at the ISM, where you ask companies what they are planning to do, consumer confidence. Usually those soft surveys are an imperfect predictor of what's going to happen to hard data, but this time could be different. We're paying a lot of attention to that. We're talking to a lot of people. We're talking to our clients, because that's what you sense first what might happen.
But, Claudia, and your biggest worry is that this lack of investment now could lead to something ugly in the future, or that it's just a period of uncertainty now?
Well, I think when you that's why I use the word we might be approaching a distrust moment. When you lose trust on U.S. policies, then you have to work hard in order to recover that trust. So it's very easy to lose the trust and very hard to recover. So I think that's the issue. There are many things that can go very well with Trump policies, like deregulation, etc. But the timing or the sequencing of those policies is important. If you start with putting a lot of uncertainty through tariffs, by the time you either cut taxes or deregulate the economy, confidence has been hurt already.
So interesting. Claudio, thank you so much for joining us. That was Claudio Irigo-Ren, the head of global economics research at Bank of America. Coming up, British Airways owner IAG is one of the big gainers in Europe this morning as profit beats estimates. So we have all of the details next. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
We want a ceasefire. We want that this ceasefire be guaranteed by European countries with an American backup.
Certainly strengthening our defense effort in the course of the next years is something extremely important because we do want to strengthen the European pillar of NATO.
Of course, what we know in Europe is that we have to strengthen our own defense capabilities. We have to reinforce the defense industry in Europe.
There's now an intense discussion underway regarding how we can further contribute to that defence and security.
We set out a clear plan for taking defence spending to 2.5% of GDP by 2027, and that will be funded by cuts in overseas development assistance. That is the right thing to do, given the threats we face from Russia.
Global finance chiefs talking to Bloomberg at the G20 finance ministers meeting in Cape Town. Don't miss our new monthly show, Next to Africa, airing tonight. Now, IAG reporting quarterly profit that beat estimates and set plans to buy back €1 billion in stock. Now, operating profit at its flagship carrier, British Airways, has risen 14% in the past year. That's as £7 billion transformation boosts results as its biggest unit. Now, the company says leisure travel remains robust. Corporate travel has also increased throughout the year, but has not recovered to pre-COVID levels. Coming up, more on the UK's meeting with President Trump.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European stocks slide as a global equity sell-off continues after President Trump ratchets up tariff threats. Donald Trump says he will restart long-stalled trade talks with the UK after hosting the British Prime Minister, plus the U.S. President backtracks on calling Ukraine's president a dictator ahead of today's White House meeting with Volodymyr Zelensky. Now, more on one of our top stories now, and UK Prime Minister Keir Starmer left his meeting with Donald Trump with much to be satisfied about, despite falling short of securing a U.S. military backstop to protect Ukraine. Now, Starmer charmed Trump by delivering a personal invitation from King Charles to attend a second state dinner in the UK, which the Prime Minister cast as unprecedented and a testimony to the close ties between the two nations. The United Kingdom is a wonderful country that I know very well.
Our countries have been bound together for a very long time now. The closest alliance, I think, of any two countries when it comes to prosperity and security. And our trade, obviously, is fair and balanced, and in fact, you've got a bit of a surplus, so we're in a different position there. And obviously, we've contributed hugely in relation to Ukraine, and taken together with Europe, there's about 50%.
It'll work out.
Does that mean there won't be any sanctions on the UK then?
We'll have to take a look. You know, the British have been incredible soldiers, incredible military, and they can take care of themselves. But if they need help, I'll always be with the British, okay? I'll always be with them. If you want peace, you have to talk, both sides. As I discussed with Prime Minister Starmer, the next step we're making is toward a very achievable ceasefire.
It can't be peace that rewards the aggressor, or that gives encouragement to regimes like Iran. We agree history must be on the side of the peacemaker, not the invader.
I think we'll have two deals. I think we'll have a deal on ending the war, and I think we're going to end up with a great trade deal with you. For more on this, let's get straight to Leslie Vinjamuri, Director of the U.S. and Americas Program at Chatham House, and Bloomberg's Greg Sullivan. So thank you both for joining us. Leslie, there's a lot to unpack. We had the visit from Emmanuel Macron to the U.S. We now have the visit of Keir Starmer. And then today we actually have Ukraine's President Volodymyr Zelensky. I mean, what do you make? Again, it's quite unclear whether he now thinks that, Volodymyr Zelensky is a dictator or not. It seems to have gone well with Keir Starmer, but you kind of never know.
Well, look, we are, 2 weeks from the vice president's speech at Munich, when we were all listening to the sounds of the death knell of the transatlantic partnership. And my God, what a change of direction, watching Britain's prime minister and America's president alongside each other, and really affirming the connection of that relationship. Obviously not in perfect alignment on next steps when it comes to Ukraine, and the coordination on this visit by Keir Starmer to meet Donald Trump, not only within the British government, but really across Europeans in that series of meetings, is very impressive. And it sounds right now like a very different relationship than it did just 2 weeks ago, which I think speaks to the point, which is that we've got to be careful not to be drawn into President Trump's machinations, his words, and really to take a very measured approach, to remember that it's absolutely essential to work with the U.S. but also to hold the line. And I think Starmer did a nice job on that. The critical question is here: Donald Trump clearly wants a sequenced approach to peace with respect to Ukraine. He's not going to play his hand yet when it comes to that question of what the U.S. would do in providing any measures to secure that peace, the so-called backstop air defenses, question of intelligence, if there were European peacekeepers on the ground. Clearly, all of these things are extremely difficult. They're very hard to imagine. It's very difficult to imagine that the UK or Europe would put people on the ground without securing, protecting them. It's very hard, frankly, to imagine that President Trump would wish to see that. He isn't going to be the president that wants to see Europeans killed. He certainly won't want to see Americans killed if they're working in Ukraine to secure some sort of critical minerals deal. So all the details are very messy, but Donald Trump isn't going to want to see devastation and loss in Ukraine. He doesn't want to be, he doesn't want to have Joe Biden's Afghanistan as part of his legacy, but he is not going to reveal his hand right now.
Greg, what do you think actually President Trump wants right now? Does he want a deal at all cost? Who does he listen to in terms of foreign policy when it, when it has to do with Vladimir Putin? How close are they?
Well, that's a very good point. One thing that we do know about Donald Trump is that he has consistently said that he does want to bring about an end to the fighting swiftly. It appears that he's very driven to secure this deal. And initially, there were European worries that it would be done without the input of the Europeans or the Ukrainians. We saw some quite eye-opening moves from the U.S. administration early on, the direct outreach to Vladimir Putin without informing European allies, the vote in the UN and labeling Zelensky a dictator, albeit he walked that back yesterday. There was initial concerns that the deal was the most important priority for him and that Ukrainian security concerns might fall by the wayside. Now, of course, those security concerns, as Leslie said, that's a huge issue, and it's very hard to see how they overcome that. What kind of security guarantee is going to be valid for deterring Russia that Russia will accept? The U.S., Trump has ruled out putting U.S. Boots on the ground. Europe has said that they don't see a viable option without U.S. support. Obviously, there are talks in Europe about putting peacekeepers in Europe, but Russia also has said that they don't want to see NATO peacekeepers. So it's quite a quandary, and that will be a huge sticking point for getting to any kind of ceasefire up ahead.
Leslie, do you understand, at the end of the day, would Donald Trump rather have a half-hearted deal, but a deal on Ukraine than a good deal, but even if it takes longer?
Hey, look, I think he would like to get that deal quickly and then deal with the rest. And this is a president who is, impulsive. He knows what he wants. He doesn't really have that strategy and that more deliberate approach. So I think his view is probably, and we don't know, but his view is probably push everybody hard, right? And right now he's pushing Europe extremely hard to step up and to recognize that this is the approach that he is going to take, and they'd better be prepared to play ball. He's pushing Russia seemingly much less hard. And I guess the logic here, if we're going to build a logic in, it's because he wants to Russia. He probably sees Russia as having an upper hand, more cards to play. And so, bringing Russia in order to get the first stage, which would be a ceasefire, it gets incredibly tricky after that. And again, I think this is where the people around Donald Trump will be intensely aware of that. Many of them supported and have given their words over the past few years to defense of Ukraine. They're having to support President Trump
Leslie,
now, and they'll wish to see that peace be secured.
Yeah, something seems to have changed, and I don't know whether it's because economics or deals on minerals or deals also with copper and aluminium now overlay everything. Is this policy, foreign policy, or is this also about trade tariffs and just getting a better deal for corporate America?
Look, there's an America First approach. What's in it for us? We put a lot of money there. We want to see something back. This is, Donald Trump's line. It's partly communicating this to Americans, to his base, demonstrating that America First approach is a serious one, that he's delivering something for them that President Biden didn't deliver. But is it realistic? Are there the nuts and bolts that it would take to actually deliver this? No. And it sort of leads you to believe that it is all part of, talking a tough game When it comes to the Democrats, when it comes to the Europeans, when it comes to the Ukrainians, to force everybody's hand, will he deliver on that? Very unclear. But at some point, he is going to want to be able to say that he's achieved something. And if the war goes on, or if Europeans and Americans put their lives at risk and die, or if there's a loss of Ukraine in a dramatic way, any of those things will play badly for President Trump. So I would anticipate that he will continue to revise his approach as things progress. But he's going to push right now, no matter what, regardless of what people will say about conditionality. He's going to push very hard for that ceasefire, and he's going to do it directly with Vladimir Putin. He's made that very clear.
Greg, how do you see this going forward? Again, how do you explain, if we don't know yet, but how do you think you could explain the U-turn from President Trump? Did he listen? Is it Macron going to D.C.? Is it Keir Starmer going to D.C. that made him say that he's surprised that he called Volodymyr Zelensky a dictator?
Well, on one hand, I do think that it is this drive for a deal. There might be some recognition that Ukraine at some point has to sit at the table and will have to agree to terms, and he wants Ukraine to agree to terms that are favorable for sealing a ceasefire. But on the other hand, there is this mineral deal that they appear to be making progress on. Trump does want to be able to hold up a deal and say, look, I have secured a deal. I am getting something in return for U.S. support. And perhaps it's more favorable at this moment. He sees Zelensky in a more favorable light. There's also the fact that he's a bit mercurial, and the last person he talked to sometimes seems to have an effect on him. So there's a lot of factors at play, but certainly the idea of getting towards a deal and this critical minerals agreement do seem to be playing into the mix here.
Thank you both for joining us. Greg and Leslie. Leslie Vinjamuri, Director of the U.S. and Americas Program at Chatham House, and Bloomberg's Greg Sullivan, editor on our Russia coverage. Now, coming up, Bitcoin tumbles from its all-time high of just 6 weeks ago. We'll discuss why next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
European equities following Asia lower as investors shun risk bets after President Trump doubled down on tariffs. The sell-off is stabilizing. For more, let's bring in Bloomberg's Valerie Teitel. Valerie, what are you seeing?
U.S. equity futures, Francine, in the green. The sell-off that we saw in risk assets into the close yesterday, having a bit of a reversal. S&P futures and NASDAQ futures both up 0.3%. Even European equities here are off their lows as well. As we head into the U.S. session where we do have some inflation data, it's nice to see the equity market stabilizing because it has been a shaky few sessions. We flip on, we can just see how the S&P 500 has performed this week because it has flipped into the red year to date, Francine. It's also slid over 4% in the week following. It's a big slide for the S&P 500. It's really retraced from those all-time highs hit a few weeks ago, but notable that equity outperformance when it comes to Europe is still performing. Those European equities, the rest of the world equities still outshining the U.S. We flip on, we could just take a look at how that has been faring. This white line here is the European equities up some 9% still year to date as that blue line S&P 500 flips into the red.
Valerie, thank you so much. Valerie Teitel there with some of the market moves. Now, Bitcoin could mark its biggest monthly drop since 2022 by the end of today as investors rush towards safer assets. Now, the cryptocurrency has fallen more than 25% from an all-time high 6 weeks ago. Emily Nicole, Bloomberg crypto blogger, joins us now. Emily, I mean, this is huge. I was like looking at the price and I was like, wait, didn't we start at this much and now it's like 79 something? What happened? 25% lower.
I think you can never discount even what Valerie was just talking about with the impact in the macro environment, everything that's happening to stocks. That knocks on crypto too. Bitcoin is considered still a very risk-on asset, so when there's turmoil happening in the S&P 500, you're going to see that in Bitcoin as well. And so that is definitely catapulting this. But on top of that, in crypto, we've had a really rough period. We've had a $1.5 billion hack last week. We've had some tumult in terms of what's going on in politics as well. So in terms of what people are expecting to see going forward, it's still very much up in the air as to how Bitcoin could perform even today.
So is it based on fundamentals? Is it risk on? Again, we were expecting a lot from the Trump administration on Bitcoin. Where are we on that?
So some of the things that Trump promised to do on the campaign trail have not yet come to force, and those are the kind of catalysts that we're looking to as potential upsides for Bitcoin in the weeks ahead. Things like a strategic Bitcoin reserve, actual progress being made on bills in the US. We've got 2 at the moment being discussed about stablecoins. If actual progress is made in those areas, then that could be a big boon for Bitcoin. But the macro environment is weighing very heavily on its potential, and so if we don't get any movement on that, if things don't start to look up elsewhere, Bitcoin will continue to be down.
Where does it go next? Is it impossible to say? Again, when you're listening and hearing people, you're my go-to person every time I have a crypto question. What are you hearing?
We're all looking at about the $70,000 mark at the minute, so if it does continue to go down, which is kind of to be expected in the current environment, then that is the next point at which we're going to be starting to think, okay, that is where a lot of the risk is happening, a lot of where the options are being built up at the minute. And so when it goes through that threshold, that'll be where there's true concern about the future.
What about the other cryptos kind of attached to Bitcoin? How are they doing?
They're all suffering too, as to be expected. Some of them more than others. For example, Solana has had a really tough time this month with the meme coin scandal with President Javier Milei in Argentina. And Ether as well is having a very tough period because that was the crypto asset in focus in that $1.5 billion hack I mentioned earlier. And so those are really, really struggling. Without any kind of potential upside, Bitcoin is the tide that lifts all boats. So when Bitcoin goes up, the others tend to go up too, but those smaller cryptocurrencies are hit harder when there's tumult in markets. They are just much more volatile by comparison.
Okay, thank you so much, as ever, for all of the analysis of what's going on in crypto. Emily Nicole there, our Bloomberg crypto blogger. Now, also making news, Meta is said to be in talks with Apollo for a $35 billion financing package to help develop data centers in the U.S. Now, sources say the alternative asset manager has discussed provided a major part of the financing. Now, KKR is also understood to be part of the investor group. Meta has already spelled out plans to spend as much as $65 billion on projects tied to AI this year. Now, Tencent has realized its Turbo AI model with the claim that it's faster than DeepSeek's chat box. The AI service is designed to respond as fast as possible, and Tencent says the deployment cost of the model has also been reduced. Now, the launch underscores the dramatically quickened pace of development since DeepSeek stunned Silicon Valley with its low-cost model a month ago. Now, coming up, preparations are in full swing for the 97th Academy Awards this weekend in Hollywood. We'll take a look at what to expect from the Oscars. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Now, award season is well underway with preparations in full swing for the 97th Academy Awards this weekend in Hollywood. Well, joining us for more on what we can expect is Bloomberg's Daybreak editor Mark Perrier and Bloomberg Opinion's Andrea Faustino. Andrea is working on the fashion side, not of the awards, but actually on whether LVMH may break up or not with a great opinion piece. Mark, you're looking at more of the fun stuff, but this comes in a very complicated, zeitgeisty era. So what are you expecting from them?
I think we're going to see a ceremony that's very respectful of the moment. The organizers, I've pointed out, they'll pay their respects to the firefighters. The city's still very much impacted by the fires. Conan O'Brien, who will be hosting, tough job ahead, but I'm sure he'll strike the right balance. We may not see the zingers we normally see at these shows, but the glitz, the entertainment factor will all be there.
Yeah, I was going to ask you, does it feel a little bit off tone? I mean, do the Oscars still matter?
They do matter. It really depends on the angle. In terms of viewership, it's come down in the years. That's more a reflection of viewer habits, but it's still one of these moments that brings the globe together, the world together. Everyone loves the movies, and it's the most important accolade you can get in the film industry.
And Andrea, I mean, again, there's a very fine line, closer and closer, between, some of the pictures, the films, the actresses, the glamour, and the fashion houses. Also, Kering bought a huge, agency brand a couple of months ago.
Exactly. Kering's Saint Laurent Productions was actually involved in Emilia Perez, so they're really close this year. But I mean, as Mark says, there aren't many of these moments that really bring people together. And fashion houses, what you want is you want your celebrity wearing your outfit to go viral and create a huge buzz about your brand. So we saw with Kendrick Lamar at the Super Bowl wearing the Celine jeans. Celine is part of LVMH. It's estimated to have created about $2 million in earned value for the brand.
What are you looking out for, Mark, in terms of films? I mean, it is also about the film. It's the fashion. I'm almost as interested in the fashion as I am in the films, but there are going to be some good films out there.
Very much, and the competition is very tight. The leaders are the Brutalist, Conclave, and Anora would be my pick to win Best Picture. The tightest race is actually in the Best Actress category. You've got Demi Moore capping her comeback, Mikey Madison coming on strong, and Brazil's leading actress, Torres, who's also looking very good. It's going to be an evening of surprises.
It is. I mean, it's quite an odd one. So you have the big studios against the smaller startups, but then you also have, I guess it's the first Oscar since Donald Trump got reelected. So I don't know whether the mood shifts from last year.
The mood will be, again, The writers on these shows are so smart. Conan O'Brien's team, they'll be writing up the jokes right up until it starts airing. And then they'll read the temperature in the room and whatever's out on social media, and they'll tweak as they go along. I expect something very glamorous, very respectful, but again, people need to laugh. It'll also reflect what's going on right now in current affairs, but I don't expect something as heavy as years past.
Andrea, what are you looking out for? I mean, is there like, if you see 3 bags on the red carpet, it's going to be outsold in the next 6 months? There must be some kind of Bloomberg ratio we can find out.
I'm sure. I'll be looking out, given the Kering Saint Laurent link, obviously I'll be looking out for plenty of fashion from them. They really need it at the moment, struggling to turn around. Gucci, any lift they can get will be welcome. Obviously, looking out for all the big brands. The one wild card, I would look out for the Gap. Now, part of the Gap strategy has been having Zach Posen, its creative director, dress some celebrities. He dressed Divine Joy Randolph for the Met Gala. I wouldn't be surprised to see a Zach Posen Gap custom outfit on the red carpet.
Okay, so fun. I'll be also looking out for Burberry, because actually Andrea and I went to the Burberry show on Monday, and they've been under so much pressure. Let's see if they come up with something exciting. Bloomberg's Mark Perry, thank you. Andrea Felsted, also thank you from Bloomberg Opinion. Up next, the Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are 3 fundamental things. Number 1, they do everything in teams. Their operations, their patients they see is all team focused. Number 2, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number 3, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
morning from our global headquarters in New York. I'm Danny Berger, Managed Cranny off today, but we'll be back with the show next week. Welcome to Bloomberg Brief. Let's set your agenda. Beijing's warning, China vows to hit back with all necessary measures after President Trump unveils additional tariffs. The deadline remains. Trump also promises Canada and Mexico tariffs on March 4th, sending U.S. stocks towards their worst week in nearly 6 months. And liquidity risks, the SEC raises concern over Apollo and State Street's private credit ETF. We'll speak with Robin Dumar of Park Square Capital later in the hour on the state of the industry. We are back into the red for U.S. stocks for the year, and we are headed for our worst week since September. We are moving higher this morning for your S&P and NASDAQ, both up about 1/3%. Russell 2000 struggles to find its feet. All of this coming after a day where NVIDIA fell 8.5%. It's trying to move higher this morning, up by 0.5%. By the way, that is its worst reaction to an earnings report since August of 2018, back when gaming was still its biggest revenue driver. So all of the risk off, driven by tech, driven by tariff fears, also means that you got somewhat of a bid into the front end of the curve. That somehow managed to drop lower yesterday. We're little changed today. We're about 4%. 2-year yields, they are around a 4-month low. The 10-year yield, that yesterday ended its run as 6 consecutive declines, though it is, let's call it about a basis point lower this morning at 4.25. Now, some individual stocks we are also keeping our eye on this morning. HP, that is one of them. Let's take a look at that in the pre-market session, how it is doing, lower by 3.4%. It gave a profit outlook for the current quarter that fell short of expectations. It also cited the impact of rising component costs and tariffs on goods from China. Meanwhile, shares of Monster Beverage rising after the energy drink maker's fourth quarter topped estimates. Those shares up 3% in the pre-market. Net sales also roughly in line with expectations. Now, Bitcoin has also been falling quite considerably this morning. The rout is deepening, so some of those Bitcoin-related stocks like Coinbase falling. Bitcoin down 5% this morning at around 80,000. In general, investors rushing to save assets in some of the wake of President Trump's latest tariff threats. Also, some individual idiosyncratic issues with Bitcoin and crypto as a whole that have been sending it lower. And coming up in the hour, we will be catching up with Kayla Cedar of State Street and Robin Dumar of Park Square Capital. Now, first, as I mentioned, a stock that we've been keeping our eye on all week, NVIDIA, a really tough day yesterday. They fluctuated all day, but eventually closed down more than 8%, something like 8.5%. Markets, I guess, weren't too impressed by the guidance after the chip giant posted results this week. Most analysts still see the stock rising. The latest call is a buy rating from DZ Bank. Joining us now for the day 3 fallout of NVIDIA, Bloomberg Intelligence tech analyst Matt Bloxa. Matt, I was just looking at this. The worst earnings reaction to NVIDIA's set of results since 2018. It took us a while, though, to actually get to the sell-off. What do you just make of some of the price action we saw yesterday?
Yeah, I think this is a really tricky moment for NVIDIA and just generally the AI market, because obviously DeepSeek really ruffles some feathers about the economics of AI going forward. And that's going to take quite a while to play out. I just don't think we'll really get anything close to clarity until we're well into 2026, if I'm honest, because this year dominated by those huge CapEx budgets for people like Meta and Google. And that's really what's kind of fueling NVIDIA's demand. And, that's about 50% of NVIDIA's sales come from those kind of big tech companies. And alongside that, you've got a huge number of AI startups of various sizes, all deploying capital into the market. And I guess the big question mark is, what is the return on investment on AI going to be? And is that going to sustain NVIDIA's revenue base where it is today, push it higher, or maybe even kind of push it into retreat? And, I think you're seeing a lot more debate on both sides of that story now than you were just a couple of months ago.
Matt, do you think any of the sell-off as it deepened as the session went on was also due to tariff threats, what we heard from Trump, additional 10% on China? And we already know that the administration has been looking at additional restrictions for chips given to China.
I think certainly the restrictions more than the tariffs. I mean, NVIDIA's chips are made by TSMC in Taiwan, so I don't think that's really caught by the tariff situation so much. But clearly, going the other way, import restrictions into China has hurt NVIDIA already. I think that their sales into China are about half what they used to be, but they have modified chips to kind of still serve that market. They're confident that the kind of revenue base they've got there now will continue, but clearly that will would be at risk if there were even stricter constraints put on the technology sector about exports to China.
Now, what's good news for NVIDIA, that is the huge demand for its chips, might be bad news from other companies. We had Dell earnings yesterday, Matt, that seemed to disappoint around some of the costs for getting their hands on the hardware they need. What did we learn from Dell? Just how problematic is the current environment and the demand for these kinds of chips?
Yeah, I mean, huge demand, but obviously there's an acknowledgement from Dell that selling NVIDIA technology to their clients is lower margin. The story from Dell, though, is that alongside those chips, they can sell a lot of higher margin product and services into those clients. So they remain optimistic that this margin dip is temporary and that they can kind of find a way around it. I mean, we have to put it in context. The company is saying that they can generate around $105 billion of revenue in this next 12-month period, and within that, about $15 billion will be from AI-related servers. So it's kind of still a relatively small part of their business, but it's growing rapidly. It'll be up 50% year on year. But yeah, the margin dilution is an issue, and they need to demonstrate to the market that they can be successful at selling these higher margin products around those NVIDIA chips.
Matt, thank you so much for joining us this morning. A busy week, I know, for you. That is Bloomberg Intelligence's Matt Bloxham. Now, currency markets and markets in general also rippling as you get the hit not just from Beijing. They are threatening to hit back on U.S. tariffs, but also President Trump unveiling that additional 10% tariff on Chinese goods. A spokesperson for the Chinese Commerce Ministry said if the U.S. insists on having its own way, China will counter with all necessary measures to defend its legitimate rights and interests. This also comes off the back of Trump confirming that March 4th would be the deadline for Canada and Mexico tariffs. Joining us to discuss is Bloomberg senior editor Bill Ferries. Bill, let's start with China and the retaliation that China is talking about. What could we realistically see from them?
Well, first we have to see if this threat is something that the Trump administration really goes through with. March 4th, yes, it's Tuesday, not very far away at this point, but there is plenty of time for a deal to be made, as we saw with Canada and Mexico just a month ago when they were on the verge of facing tariffs. But China has so far been relatively restrained after that initial 10% tariff went in from Trump early this month. They did put tariffs on some products, but they didn't. They kind of managed it to minimize some of the blowback on their economy. Obviously, the U.S. imports a lot more from China than China imports from the U.S., but it does have a lot of tools to hit American companies, hit American farmers with. So we'll just have to see whether they really need to do that. 96 hours is not a long time, but it is enough time in Trump world to strike a deal.
I mean, that is really something we learned the last time around when some of these tariffs to Canada and Mexico are delayed. But I just want to take one phrase from that tweet from Trump yesterday that really started the snowball effect of risk selling off. He talked about the idea that these tariffs were going on because of drug issues, because of immigration issues. And he used the phrase that the tariffs will go on until it stops or is seriously limited. What does that tell you about the ability of these countries to reach a deal with the U.S.?
Well, there's no clear guidelines or markers. There's no sense of like, what will it take? If you're talking about Canada and Mexico, and Trump's talking about illegal immigration and fentanyl, how much does it have to go down before they, reach a barrier that allows tariffs to be eased? That's the whole murky part of all of these negotiations. With Mexico, we're already seeing them agree to send more than 24 jailed cartel leaders that the U.S. has long wanted to the U.S. So is that the start of some kind of a negotiation that's going to gain speed over the weekend and into Monday that allows them to have this latest threat delayed another 30 days? I think that's the big question mark and what we don't know heading into the weekend. I don't think we're going to know if tariffs come in on China, Mexico, or Canada until at some point Monday evening or even Tuesday morning when we all wake up.
Bill, I just want to end it on this because we've also had a variety of different world leaders come to Washington, D.C. It was the UK's Keir Starmer yesterday. Zelensky heads to meet with President Donald Trump today. What are we expecting in that meeting?
Well, with Zelensky, you know, we still don't have the details of this new fund that the U.S. and Ukraine are creating. We don't know what it's going to get topped up to, what the terms of it are, what it'll spend money on. I think the most important thing for Ukraine here is that they're having this personal meeting between Zelensky and Trump, that they are still having, after last week in which the two sides were really criticizing each other, the fact that these two leaders are in the same room shows that Ukraine is still somewhat near the table, if not at the table, as Donald Trump tries to rapidly strike a deal with Vladimir Putin. It is almost more of a political agreement than an economic agreement at this point. We just have to see whether it really lasts.
Bill, thank you so much for that update. Please enjoy the rest of your Friday and your weekend. That is Bloomberg's Bill Ferries. By the way, UBS's chief economist Paul Donovan writing in about the tariffs, saying crying wolf on tariffs has economic implications. Even if the taxes never appear, there is some evidence of consumers buying earlier out of fear of tariffs. Firms may raise prices, and business investment is an uncertain future. Okay, let's get to some other top stories that are trending on the terminal this morning. Bloomberg sources say that the SEC has expressed concerns over a much-anticipated private credit ETF from State Street and Apollo. The regulator has concerns over the fund's liquidity and its ability to comply with valuation rules. A representative for State Street declined to comment. A representative for Apollo also did not immediately provide a comment. French inflation dropped to its lowest level in 4 years, supporting the case for further interest rate cuts by the ECB. Consumer prices in France rose 0.9% from a year ago. That is below analysts' forecasts of 1.1%. The central bank is expected to cut its deposit rate again next week to 2.5%. A wave of drills by China's military in the Indo-Pacific is testing the Trump administration's commitment to regional security. The drills have raised concerns over Beijing's intentions with Australia, Vietnam, and Taiwan. The U.S. response, that is closely being watched. Some have started to question its commitment to allies. Coming up, State Street's Kayla Cedar remains optimistic on stocks after yesterday's sell-off. She will be joining the program next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in New York. Futures are edging higher. though, ahead of a last trading session of the week filled with trade tensions, geopolitical risks, NVIDIA earnings, a lot to digest, and a lot that sent stocks lower this week. But State Street's Kayla Cedar writes, quote, although turbulence is elevated, our measures of systemic risk indicate that the foundation of the equity market is still solid. Essentially, the risk message is buckle up, but it's going to be okay. Joining us now is Kayla Cedar, macro multi-asset strategist at State Street. Kayla, I think we all need to buckle up. I think that is very wise words. But it's enough to send equities to on track for their worst week since September. Why, for you, is this just more turbulence, but not necessarily a reason to step out of the equity market?
Yeah, good morning, and thanks so much for having me. So, I think there are a couple of reasons why we still like equities. As you mentioned, our tracker of systemic risk still remains muted. And so what that means is that although turbulence is high and we expect turbulence to remain elevated, the foundations of the equity market are still really strong. And I think that makes sense when you look at institutional positioning. Positioning is still in really high quality parts of the market. So in more, I would say, times when there's increased risk for volatility, you want to make sure you're in high quality parts of the market. And that's where we really see investors sitting right now. And so that would limit downside opportunity. And then when you think about, okay, what are your relative options? Do you really want to go into fixed income right now? And we can talk a little bit more about that if you want. But right now, that relative story still seems like moving forward, we like that pro stock outlook.
I actually do want to talk about that, Kayla, because we had Priya Misra on from JP Morgan yesterday, who said that she's been talking to clients, trying to convince them to get out of cash and get into fixed income because they are working as a ballast against equities. You don't think it's time yet. Why not?
Yeah, there are a few reasons. One is that we really need to look for increased deterioration in the growth story. Right now, we've seen soft data start to roll over, but we haven't really seen that in the hard data yet. And why that's important is because really, if we want to see at least 2-year yields move lower, we probably need to see more cuts priced in. And until we see more cuts priced in, you really need to see that driver probably be the growth story, because it doesn't look like inflation is rolling over.
That really speaks to this moment we're in. And I wonder how you see it, Kayla, because you could kind of make an argument for any macro setup. But how are you seeing it? Is this an economy that's too hot, too cold, just right? Some maybe stagflationary combination of the three?
Some of it is the latter. However, I think it's probably too early to use the stagflationary word just yet. However, it is more uncertainty. And that's what we've really seen over the past 6 weeks, is an increase in uncertainty. What that means is we're constantly monitoring, okay, what's happening to inflation and what's happening to the labor market, and where are the risks for both and what needs to be prioritized first. And what we see right now is that, yes, inflation expectations are rising. Inflation is hotter than the Fed would like. However, expectations on the market side still look capped. And so that gives the Fed time to be patient. When we look at the labor market side, we would still categorize the labor market as balanced. But that's one reason, especially why next week we'll get updated NFP numbers, labor market numbers. That's really where we're looking to see whether or not the consumer and the labor market is weakening. And we just haven't seen that yet, but we're closely watching.
Fair enough. It's been the soft data, not the hard data. But what the markets seem to be reacting to now, Kayla, is this attempt to price in tariffs. You had Trump confirming that March 4th will be the date that you get Canada and Mexico tariffs. But to be fair, we've seen him make deals in 24-hour run-ups to various tariff impacts. Do you wait to actually see the white of the eyes of tariffs to price that in? And what does that actually look like in terms of an impact to risk?
I would say there's 3 ways we're looking at this. One is we look at our behavioral risk scorecard, which is tracking institutional positioning and flows across a variety of asset classes. And that really gives you a holistic picture of where risk sentiment is. And right now, we do see neutral to positive risk taking across multiple asset classes. And so that is telling us that long-only investors are somewhat looking through some of these risks. And then you have to ask yourself, okay, why might they be looking through tariff risk? And this leads me to the second point, which is positioning. And where we see positioning is in A, high quality parts of the market, but B, when you look at regions, we have underweight exposure to China. There's underweight exposure to Mexican equities. Things like that look like, okay, some of the tariff risk is already priced in. And then when you look at it from a sector perspective, positioning in autos is neutral, positioning to places like pharmaceuticals, healthcare, that's already underweight. And so there are some places where tariff risks are actually already priced in, and that might be limiting some of the downside already.
Kayla, just before we let you go, in terms of the shift and the move to quality in the equity market, there seems to have been a vibe shift in tech. You saw it in NVIDIA earnings yesterday with their worst reaction to an earnings set since 2018. Mag 7 looks something like of a correction so far from its peaks. Has there been a vibe shift, or will tech leadership come back at some point?
We think it's too early to abandon tech. However, when you think about the vibes and the uncertainty, where we do see increased appetite is for defensives. And so, when you're thinking about where you want to increase exposure, defensives, especially places like, say, consumer staples, if you are concerned about the consumer, that could be a low beta, still relatively high quality part of the market to shift some of your allocation to. And so really, if you're thinking about, do I go into cyclicals? Do I go into defensives? Now could be a good opportunity for more of that defensive story.
Kayla, so wonderful to have you on. Thank you so much for joining us. Kayla Cedar of State Street. Enjoy the rest of your Friday and your weekend. Coming up, a multi-trillion-dollar fat finger. Oops, one customer was credited $81 trillion by Citi. We'll have more on that story next on your Bloomberg Brief.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Let's take a look at the front pages this morning. First up, the New York Times leading with a federal judge ordering the Trump administration to retract memos that prompted the firing of thousands of federal workers. He said the directives were illegal and suggested that the layoffs be stopped. Next up, the Wall Street Journal has this. The Transportation Secretary, Sean Duffy, saying the government is attempting to hire more air traffic controllers and upgrade the aviation system. The FAA will boost pay for students at its Air Traffic Control Academy. The FAA has struggled with low staffing for years, often leading to flight delays, which I'm sure many people out there have experienced. Okay, this from the Financial Times. You have to read it to believe it, that Citi accidentally credited $81 trillion to a customer's account last April. The amount was supposed to be much less more than that. As you could imagine, the transfer was missed by 2 employees and detected by a 3rd employee 90 minutes after it was posted. A Citi spokesperson said the incident had no impact on the bank or its clients. A total of 10 near misses of $1 billion or more occurred at Citi last year. I would love to see anyone attempt to pay a bill of $81 trillion. Okay, coming up, we have inflation data on deck. We will set you up for it. We catch up with Bloomberg's Mike McKee. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York, welcome back to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Beijing's warning China vows to hit back with all necessary measures after President Trump unveils additional tariffs. Meanwhile, trade jitters send stocks across Europe and Asia lower. U.S. futures and the dollar is higher. Pushing back on private credit for the masses, the SEC raises concern over Apollo and State Street's private debt ETF. We catch up with Robin Dumar of Park Square Capital on the state of the industry. Back into the red for the year on U.S. stocks, and we are headed for our worst week since September. We move higher in U.S. futures this morning, up 1/3 of 1%, NASDAQ 100 up 0.2 of 1%. After NVIDIA sold off 8.5% yesterday, it is moving higher. The concern for these markets have been new tariffs. President Trump tweeting about the idea that we will be getting Canada and Mexico tariffs on Tuesday, additional 10% for China. You did see inflation swaps move higher, but there was a bid into the front end of the curve yesterday. Your 2-year yield, that is unchanged this morning. 10-year yields move lower by about a basis point. They're at 4.24. That 2-year yield, by the way, is falling to around a 4-month low. So as I said, Beijing has threatened to hit back after President Trump unveiled an additional 10% tariff on Chinese imports. A spokesperson for the Chinese Commerce Ministry said if the U.S. insists on having its own way, China will counter with all necessary measures to defend its legitimate rights and interests. As I said, the president also said levies on Canada and Mexico are on track to take effect on March 4th. Joining us now to discuss is Bloomberg's Tyler Kendall in Washington. So Tyler, what does the calendar look like now for tariffs?
Yeah, Danny, well, the calendar's been expanded, right? Originally, we were expecting these March 4th tariffs to go into effect, and they'll come alongside, as you mentioned, those tariffs against Mexico and Canada as well. And it's important to keep in mind this entire set of tariffs, including the impending tariffs against China, are really tied to some tangible policy priorities for this White House when it comes to immigration and also fentanyl. You heard President Trump yesterday renew his accusations against China when it comes to illegal drugs coming over the U.S. border. And Bloomberg News reporting, though, that this announcement, particularly against China, really caught officials in both countries by surprise. But it does continue what has been recent action by this administration against China, including renewing investment curbs against Chinese investment flows coming into the U.S., also proposing heightened fees against Chinese-made vessels that ship U.S. goods. And then just lastly, Danny, Bloomberg News reporting that just last week here in Washington, U.S. officials asked Mexican officials to hike their own tariffs against China, too.
We saw in President Trump when he tweeted yesterday, he had this phrase, Tyler. He talked about we can't allow this to continue in the U.S., referring to China and Mexico and the concerns about drugs and immigration, saying, quote, until it stops or is seriously limited. Does it seem like there is scope, there is a way for Canada and Mexico to avoid the tariffs come Tuesday?
Well, Bloomberg News is reporting that U.S. officials are looking closely, particularly when it comes to overdose deaths, when it comes to this issue. And recent data shows us that those deaths actually are dropping. The most recent federal data showing overdoses killing roughly 240 people per day. So we'll have to see, though, if that could be enough progress. President Trump yesterday in the Oval Office saying that he's not impressed when it comes to this. We know that, for example, Mexico has also sent about 10,000 troops up to the U.S. border. Canada has implemented its own fentanyl czar to try to crack down on this issue. But it really does seem to be playing more broadly in these connections to China. We'll have to be watching if they take any specific actions against China to curb this immigration and also the fentanyl as well.
Tyler, just finally, we've had a variety of world leaders come to the White House, come to Washington, D.C. It was the UK's Keir Starmer yesterday. Today, Ukrainian President Volodymyr Zelensky will be heading to meet with Trump. What are we expecting out of that meeting?
Right, well, he's expected at the White House at 11 a.m. Eastern, then maybe we'll get a few additional details at a 1 p.m. Eastern press conference. And the biggest thing on the table is we're waiting to see if this White House will commit to any firm U.S. security guarantees. President Trump previewed yesterday that they are expected to sign a critical minerals deal, but Bloomberg News is reporting that we are not expecting those security guarantees to be inside that deal. It comes after, of course, French President Macron was here earlier this week, and Keir Starmer was at the White House yesterday trying to press the U.S. when it comes to this. Both have floated that they are looking into some sort of framework to get European peacekeepers on the ground in Ukraine, but they have suggested that they would like the U.S. to underwrite such a deal. But President Trump sidestepped those questions yesterday, saying that he doesn't want to talk about any of those guarantees until a firmer peace deal is in place. Instead, he has been citing this critical minerals deal as being a sort of an implicit security guarantee when it comes to this, saying that the U.S. would have a vested economic interest in Ukraine's future. future. But importantly, that is not what Ukraine would like to see. And Zelensky has repeatedly said that U.S. aid to the country negotiated under the last administration does not amount to a debt that Ukraine needs to pay back.
Tyler, we really appreciate the update. That is Bloomberg's Tyler Kendall in Washington. Now, we're just under 3 hours away from the latest PCE and personal income and spending data. Let's bring in Bloomberg International Economics and Policy correspondent Michael McKee to help set us up. Mike, PCE, I mean, we kind of know what this is going to be, right? What are we expecting?
It's a little bit of managing expectations here after some bad economic news, inflation news over the course of January for CPI, PPI, et cetera. This one could come in a little bit better because we're able to calculate a lot of the things that go into the PCE, and now you can see what economists are thinking, that we get a 0.3 for both the headline and the core, and that pushes down both the headline and the core on a year-over-year basis, which is not what we saw in CPI, and it would give the Fed the idea that perhaps we're starting to see progress again on inflation. However, we also get some spending numbers here, and there you can see what we're looking at in terms of the overall inflation numbers. The orange there is services. That includes housing, and that's still the big issue. But everything below that is below zero on this chart. So we're starting to see some progress there and hoping that continues. The spending numbers will be key, though, because if the American people cut back and we had a bad retail sales report, then the Fed is maybe going to have to think about cutting rates, not because inflation's going down, but because the economy is softening. I think we're still many months away from that kind of decision, especially since we've got more and more Trump tariff news to try to digest.
It's so true, but there has been this concern that the sentiment data has been soft. Is there any sign of that at all so far, that that's starting to creep into some of the harder data?
Well, we've seen a couple of things that are giving economists pause, one of which is the fact that the retail sales data was not great. We'll see what happens with the spending data today. The biggest thing, though, is that recessions are confidence issues. People lose confidence and stop buying, companies stop producing, then they lay off people and you go into recession. So you got to keep an eye on what people are thinking about the economy. I don't think people are ready to give up yet, but there are some signs that people pulled spending forward, bought stuff like in December because they were afraid of tariffs to come.
Yeah, something Paul Donovan at UBS has been talking about, the crying wolf on tariffs has economic implications, kind of talking to what you're speaking of pulling things forward. In terms of the Fed reaction, it's this constant tricky line of how much do they incorporate tariffs and some of the consumer changes in behavior to it. Have we heard any indication that their thinking is evolving on that front, or they're even willing to wade into that?
They're not willing to wade into it. What they've been doing is all their research directors have been tasking their staffs, if this happens, if this happens, if this happens, run a model and see what you think the effects are going to be. Once we get those tariffs that keep getting pushed back and pushed back, then they can model it, figure out what they think might happen, and then start to decide whether there's any monetary policy that can address it. A lot of the feeling is, comes in once, raises the price level, and then it doesn't keep happening. And if that's the case, then the Fed probably looks through it.
Well, next week could be a very interesting week for that if we do indeed get Canada and Mexico tariffs on March 4th. Mike, thank you so much. That is Bloomberg's Mike McKee. By the way, the latest flow show from Bank of America coming out saying that there's been a record outflow from crypto, a record inflow to gold, and interestingly, the biggest week of U.S. stock inflows in 2025, despite the fact we've seen a sell-off in recent days on those tariff concerns. Let's now get you some other stories that are trending on the terminal this morning. Some German industries are beginning to plan for when Russia gas returns to Europe as President Trump pushes to end the war in Ukraine. Europe has spent 3 years weaning itself off of gas from Russia, with the biggest impact being felt in Germany. Rising energy prices have hit growth and forced some manufacturers to move production abroad. Elsewhere in Europe, French inflation dropped to its lowest level in 4 years, supporting the case for further interest rate cuts by the ECB. Consumer prices in France rose 0.9% from a year ago. That's below the analyst forecast of 1.1%. The central bank is expected to cut its deposit rate again next week to 2.5%. Now, a number of drills by China's military in the Indo-Pacific is testing the Trump administration's commitment to regional security. The drills have raised concerns over Beijing's intentions with Australia, Vietnam, and Taiwan. The U.S. response is being closely watched, with some questioning its commitment to its allies. Now, I mentioned that statistic from Bank of America that there have been record outflows from crypto in the past week. You can see that clearly reflected in the price. We are back below 80,000. We're down some 27% from the peak of Bitcoin. By the way, Michael Hartnett of Bank of America also saying that the Trump put is at 5,783 on the S&P 500. That's when he said some of the pain stops and we might get a reaction from the White House. Coming up, we speak with Robin Dumar, Park Square Capital, on the opportunities and challenges of private credit and the convergence of both private and public. That comes up next. You don't want to miss it.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry, and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in New York. Now to a Bloomberg scoop. The SEC has expressed concerns over a much-anticipated private credit ETF from State Street and Apollo. The regulator cited the fund's liquidity and its ability to comply with valuation rules, among other concerns. I'm pleased to say that joining us now is Robin Dumar, managing partner and founder at Park Square Capital. Robin, I mean, this is your world, not the ETFs, but the private capital, the private credit of it all. Does an ETF wrapper make sense for this asset class?
I think ETFs in equities make a tremendous amount of sense. Very low-cost product, very hard to beat for single-name asset pickers when the entire market is moving up. So it's a very good way for equity investors to get exposure. In credit, by contrast, I don't think it's an interesting product broadly, and I won't reference any one product, but the asset class of an ETF for credit I think is questionable because there's not liquidity in necessarily the underlying names, particularly as you get more private. But to me, the bigger concern is the broad market is not attractive. It's a market where the key to performance is avoiding zeros and avoiding mistakes. And so there's just a lot of sewage in the broader market, and it's not an index that I'd like to own.
I know this is what sets you and Park Square apart from others, and that other private capital, private credit managers try to be everything to everyone, but you're quite selective. So what don't you like at this moment? What in the broader market would you be trying to avoid right now?
So what's key to us is to stick to high quality, stable, predictable businesses. We like things like software, healthcare, business services, high margin industrial companies. We have no automotive exposure, no automotive suppliers, no retailers, no chemical manufacturers, no packaging, no airlines, no cruise ships, no things in hospitality or restaurants. So really a super selective approach and very service-oriented approach, which for Europe, as we think about things like tariffs and other possibilities, means that I think we can sleep comfortably at night in terms of the portfolio.
How do you incorporate tariffs in? Are you at a point where you just picking things that have no exposure, or are you waiting till you see actual policy announcements from the U.S. to make those kinds of decisions?
So we're always careful to avoid what we view as cyclical manufacturing businesses and export-import businesses. We really have almost no exposure to that. So that's really a good first step. I think the other thing that's so terrific about private credit generally is we don't have to worry about it, really, which is to say we are floating rate investors, and the biggest impact that we may see in a macro sense from tariffs is on interest rates. And so by being interest rate protected and floating rate, I think just it's a wonderful asset class for this sort of environment where equities are, risky and where traditional fixed income has been disrupted and constantly disrupted by the trajectory of interest rates.
Well, I have to press you on your outlook for that then. Are you concerned that inflation will remain sticky or move higher with tariffs and therefore disrupt and make it harder for some of these companies to have elevated rates they need to pay?
The great news, Danny, is I don't have to worry about it too hard. Because if we do see an increase in base rates, that's very good for us because we're a floating rate investor. It's great for our investors. If we see things move down a little bit, it's very helpful in terms of overall credit quality. And so I think, again, it's that floating rate asset which is so attractive. And I think that's why you're seeing such deep interest across the board in private credit, which is in this kind of environment in particular, where equities, again, seem to be very fully valued and where fixed income seems very volatile. It's just a nice way for investors to get a very attractive return.
On that point of volatility, though, there's this classic illiquidity premium that's talked about with private credit that you don't have to mark to market. If we are heading to this world of going back to sort of the ETF conversation, where there's this convergence of public and private assets get traded more. Apollo has a trading desk now to try to trade some of these things. Does that illiquidity premium start to shrink as more of these different assets, more of these different funds, and private credit needs to be marked to market?
I think at the large end of the market, we are seeing convergence. It's not particularly new. It's much talked about now, but we're definitely seeing it where the very large asset managers can step in and speak for an entire transaction, even if it's $1 billion, $2 billion. I mean, these are, really large sums. I think what people may lose sight of is there is no liquidity to create if one or two individual institutions own a loan. If they don't want to sell, there's no liquidity. And so I'm not sure where the liquidity comes from in some of these very small syndicates. Now, in a big syndicated loan with 50 plus investors, there's going to be, probably pretty reasonable liquidity. But I think you definitely are seeing convergence.
But it's only happening on, again, the sort of bigger asset side. So is it kind of overhyped, this idea of everything's coming together? There's the lines blur, they're all the same. I mean, it's something that we've heard from, I know we don't need to talk about individual names, but Mark Rowan talks about this a lot, that it's happening and it's happening everywhere in private credit. Is that just a bit too far?
I think it's absolutely correct that the convergence is happening. I think it's a bit overhyped. I think for the very large asset gatherers, they're seeing a lot of pressure on their portfolios where the syndicated loan market today is refinancing them. And the syndicated loan market is white hot. It's very aggressive. We're back to territories that we haven't seen in years where syndicated loans are pricing at 300 over, if not inside of that, 275, 300 in the U.S. That's a far cry from 5 over direct lending areas. And so I think what you're seeing is some of the big asset managers desperate to defend their portfolios. And I think it's going to have a bad effect, frankly, on performance.
Okay, a bad effect on performance. I also wonder what the effect on behavior will be, because private credit, it's an asset class of norms. There are certain things that managers could do, but perhaps don't do. Again, because of those norms, you see it broken every now and then, the creditor-on-creditor violence. Public markets have different sets of norms. If there is this convergence, do the norms also converge? Do you see more, I guess, creditor-on-creditor violence, those sorts of things happening?
I think you're spot on to talk about norms, and I would put it slightly differently, which is alignment of incentives. I think if you think about banks, syndications, the public markets, people think in a very short time frame. How is a position doing today? What is the mark? How can I get rid of it? If you think about private credit, we're thinking about multi-year commitments, owning things. It's hunter-gatherer versus farmer. It's a very different alignment of incentives. We're incentivized to make sure that our investors get a very good return over a long period of time. Be very careful. Choose your assets really well. Sit and monitor things carefully. Have radically transparent discussions about performance internally. All those things are very difficult to do in big organizations like banks that are very focused on daily marks.
Robert, I just want to end with this, that we've seen in public markets, U.S. equities have struggled. U.S. debt, as you said, has been volatile, at least treasuries have. While Europe has all of a sudden got all this attention, while European equities are at all-time highs. I know you sit in London, so you've been investing in European assets for some time, but has the same happened in private credit? Has there been a realization of an opportunity set in Europe?
I think there is a very similar phenomenon going on. So I think you're spot on that what we are seeing is that Europe is cheap. Europe is less well served from a capital market standpoint. And now I think with U.S. markets, both equity and credit markets, feeling frothy, where investors are struggling to see value in some cases, there is now a clear recognition that Europe looks really super interesting. And we're starting to see this in transaction activity where, for example, public to private transactions, take private transactions, look really interesting because Europe is so inexpensive. So we're definitely starting to see this factor through into markets.
Robin, it's been too long. It was so great to have you here.
It's great to be here.
Thanks for
you,
stopping
Danny.
by the set. Robin Dumar there of Park Square Capital. You're welcome back anytime you're in the city. Okay, coming up, we're going to be wrapping up the week with PCE numbers. President Zelensky also heads to the White House. We will set up your trading day on your last trading day of the week. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Made it to Friday. Let's get you set up for your trading day on the last day of the trading week. PCE, inflation, personal income, and spending data. All of that comes out at 8:30 a.m. Eastern. Then Ukrainian President Volodymyr Zelensky will be meeting with President Donald Trump at the White House at 11 a.m. Some Fed speak to watch out for. Chicago Fed President Austin Goolsbee will be speaking at 10:15 p.m. Eastern time at a Stanford event. Some stocks to keep your eye on. NVIDIA, that is back up. It's leading the rebound in Mag 7 stocks. Those shares up just 0.8%. They closed down more than 8.5% in the last session. DZ Bank also raised it to a buy. Dell, that is extending its post-earnings drop, down 2.5%. Investors concerned about AI hardware profitability. And rounding things up with Monster Beverage Corp, they make the energy drinks. Those shares up 2%. They had better than expected margins that boosted shares. Now, overall equity markets trying to find their feet. We are on track for the worst week since September. The concern about tariffs sending them lower, but strong inflows for the year, according to Michael Hartnett over the past week. Okay, that is it for Bloomberg Brief. The surveillance team will take things from here.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
The big picture hasn't changed yet. The market is concerned about growth.
A key pillar of this bull market has been the resilience of corporate earnings.
We've struggled here domestically to kind of meet the bar of high valuation.
The broadening out of earnings later this year among the S&P 493 is really the most important question to watch.
The level of concentration is dangerous. You look back in history at times when we've been even remotely close to this, it's ended badly.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, heading towards the worst week of 2025 on the equity market on the S&P 500. Your scores look like this. Struggling to bounce by just 1/3% on the S&P 500. On the NASDAQ 100, up by 1/4%. Trade tariff threats front and center. The new proposal, 25% on Canada and Mexico next week. You know about that, but let's throw this one in there, an additional 10% on China.
So I'm going to take that and raise it and say, is that the reason why you're seeing the sell-off in equities right now? Is it that people suddenly believe that this could really escalate to some sort of tit-for-tat trade war, which seemed to be at least the rhetoric coming out of China? And this, to me, ultimately raises the question that Michael Hartnett raised at Bank of America. Does this mean that ultimately we are testing the Trump put, that if he doesn't walk back some of his rhetoric, we could end up with a much bigger sell-off as people prepare for actual tariffs?
So equities got sold off and sold hard going into the close. And I noticed the same thing that I think Michael Hartnett did as well. They didn't really talk about the stock market at all, or the economy in the news conference. It's barely on their radar. So where is that Trump put? This is what Hartnett and the team seem to think. 57.83. Why 57.83? That was the close on election day. And then if we break below that level, you start to write the headline, stocks down under Trump, and all of a sudden maybe they start to take an interest.
Basically, if they care about the stock market, that is the strike price at which they ought to come out and be verbal about it. To me, this all goes back to this question of, does this Trump administration care about stocks, or is the focus fully trained on bonds, on the 10-year Treasury yields at a time where they're trying to create more efficiency in a government beset by a ton of debt?
We're about to find out how much this Federal Reserve cares about inflation. At 8:30 Eastern Time, you'll get PCE, their preferred read on inflation in the United States of America. Then after that, you get some Fed speak. And yesterday, the Fed speak was absolutely fascinating. President Schmidt saying the following: the Fed might have to balance inflation risks against growth concerns. The first acknowledgement from a Fed official about the prospect of stagflation.
That's exactly what stood out to me. Yesterday, stagflation suddenly came into the front and center for the first time in a long time. We heard that from Torsten Slok, and we heard that creeping into the rhetoric of Fed officials. Which is the biggest problem for them? Is it inflation, or is it the potential for slowing growth? They might get a reprieve today if PCE comes in a little bit below expectations, but to me, this is what's creeping into the market maybe more than even tariff threats.
Anne-Marie's down in Washington, D.C. She's got a lot to cover. We'll catch up with her in about 15 minutes' time. Equity futures at the moment struggling to bounce, up by just 1/3%. The best day of the week so far, a gain of 0.01% on the S&P 500. Joining us through the next 60 minutes, Cameron Dawson of New Edge Wealth on increasing downside risk. Former Trump trade advisor Kellyanne Shaw on President Trump's looming tariffs. And Greg Dacko of EY as economists await the next read on inflation. We begin this hour with stocks steady as markets head towards a second week of losses. Cameron Dawson of New Edge Wealth writing, upside is possible, but downside is likely over the course of the year due to the increasingly higher potential for detrimental policy, high starting valuations, and stretch starting positioning. Cameron joins us now for more. Cameron, good morning.
Good morning.
We've got tons to cover with you as well. Let's talk about next week. Tariffs. Are you expecting those to go on? The 25% on Mexico, on Canada, the 10% additional tariff on Chinese imports?
We don't think that we should rule it out. It seems like it's a key policy priority for this administration, and it is seeming increasingly that it's a key pay for the tax cuts that they want to be able to deliver. The problem is you get the tariffs immediately and taxes happen much later in the year, which just means that you don't get the offset immediately from the lower taxes in order to make the tariffs more palatable.
We've had a bit of a growth scare already in the equity market. The scores look like this for February. Consumer discretionary is down about 11% on the S&P 500. 10-year bond yields are lower by more than 25 basis points. Is it time to lean the other way or still too soon?
We don't think that the market is oversold yet, but we think that we've been seeing this brewing of a growth scare for some time. For the last 6 months, we've been cutting EPS estimates for the S&P 500. The market was rallying, but it was all based on valuation. You've also seen economic surprises roll over, so we are not surprised to see the 10-year Treasury move lower, simply because economic data has been weakening for the last couple of months. We're not at the point yet, again, that we're seeing markets be deeply oversold. We're getting a little bit closer after yesterday's move. And so we do think that eventually that's a buying opportunity simply because you're not seeing a big increase in recession risks, but certainly you're at the point where volatility is likely to remain.
You know, I want to just go back to what caused the sell-off yesterday. We're talking about tariff threats, but I took a look at some of the biggest losers. And actually, autos weren't that down as much as NVIDIA was, even after reporting better than expected earnings. There's the growth fears, but we're not seeing it represented in some sort of massive way. It really has been the big tech story. How much is that really what's underpinning some of the mood shift, the idea that this is a boom and bust cycle in technology like it always is, and we might be on the other side?
I would take it a step further and expand to it's the broader momentum trade that's unwinding. Because we think this all started back when Walmart reported back last week, where you saw Walmart's one of the biggest names in the momentum index or momentum ETFs. That name trading down caused this spreading of things like Goldman Sachs to trade down, NVIDIA, Broadcom, all of these high momentum stocks have started to pull back pretty significantly. And we think it's just an unwind of that crowded positioning, crowded valuations. And because the valuations got so high, you had no room for error. So the unwinding of it just has much higher magnitude.
Why is it unwinding now? People have been talking about high valuations for a long time. They blamed it on everything under the sun, from high rates, from the idea that you're going to get an unwind from a surge in inflation. We haven't gotten either of that. Rates have fallen and inflation seems to be slowly coming out of the system. So what is it about this moment that is causing this unwind?
It's a great question because we always know that valuation is not a catalyst, but you're seeing it work to the opposite direction within international markets. Look at the German DAX going parabolic year to date, and it's not really based on any real fundamentals. It's just this big repositioning out of U.S. hyper-dominance into a more global kind of leadership. But the reality is when you're starting from low valuations and just moving a little bit higher, you get these big moves to the upside. The opposite is true. You start from high valuations, no room for error, so you get bigger moves to the downside.
We've seen this shift in sentiment in the bond market as well. All of a sudden, 7 consecutive weeks of yields falling, not climbing. That went against the grain too. And this has happened without a real deceleration in the hard economic data. Lisa raised this question yesterday on the program. Soft data has started to soften up. Do you see that bleeding into the hard data anytime soon?
It's such an interesting question because we did see soft data spike right after the election, meaning that you saw a big improvement in sentiment, and that has almost completely reversed. It did not result in better hard data following the election when we saw the soft data come up. So I think it will be really interesting today. We get the PCE. Will personal consumption, it's actually more interesting to us than the inflation part of things. Will you see personal consumption take a big dive? Consensus has estimates at 0.2% versus 0.7% in December. Could that surprise to the downside? And that would be a key test of will hard data follow soft data down?
There has been a sense that maybe we're not shifting to a slow growth. Maybe we're not shifting to rapid disinflation or a rapid spike up in inflation. But this S word that John started the show with, stagflation, and this fear that seems to be coming up again and again, do you think that that is going to dominate over the next few months, or do you think that this is people flipping and flopping and trying to create a narrative to fit the moment?
So when you hear the word stagflation, you think 70s, which is high unemployment and a spike in inflation. We don't think we'll get that extreme. We think it's more stagflation light, kind of tastes great, less filling kind of stagflation, which just means stickier inflation and slowing growth. And that's something that the equity market doesn't like. It's certainly something that the Fed doesn't like. The question is, we think that tariffs could be initially inflationary and then after deflationary. So how does the Fed navigate that? Because if they ease policy in anticipation of that eventual deflationary episode from tariffs, the question would be is, do they run the risk of causing inflation to metastasize through the economy by easing policy too much with that downward pressure on growth? So we do think that their back is against the wall, which is why we think they're in this hold position until we see an uptick in unemployment.
Have you ever felt this exhausted at the end of the week?
Nope.
Okay, so I'm thinking about all the different mental gymnastics that everyone is trying to do to understand every different angle. What do you do with that? How do you invest with any conviction?
Yeah, so we think that we have to see volatility as a friend. We have to see volatility as opportunity because we do know that narratives will take hold. We'll see overcorrections to the downside. And this is why we think at the end of the day, it's far less important where the S&P 500 ends at the end of this year, far more important what you do with the volatility. We think that we could very easily retest the 200-day moving average. Interesting about that 57.83 level, that's effectively the 200-day. So we would get to the point where we would want to step into markets into that volatility. But we think that you keep your head down, you focus on quality, you focus on great companies that have the ability to navigate this uncertainty and use volatility to be able to add to your best positions.
March 4th is Tuesday. 25% additional tariffs on Canadian and Mexican imports. Throw China into the mix as well. You mentioned whether the market's moving for it. This month in February, still got another day to go, the peso and the loonie both stronger on the month marginally against the US dollar.
There is a feeling that this is all a threat. And even yesterday when Donald Trump came out with his Truth Social post, he seemed to indicate that it had to do with migration and immigrants and fentanyl more than it did about some sort of reciprocity, which made people think that maybe there was some sort of negotiation. You saw the leaders of both countries come out and say, look, we're working with them and we think that we're going to give them as good. So a lot of people seem to be dismissing that. The China story is different, and we're actually starting to see that in earnings.
Cameron, it's good to see you. As always, good to catch up. Cameron Dawson of New Edge Wealth. This week's just never ending. The S&P 500 down on the week, down on the month, up on a session by 0.4%. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Ukrainian President Volodymyr Zelensky will meet with President Donald Trump in Washington today. The two leaders are expected to sign a mineral deal after Trump called Putin last week to discuss a peace plan. The agreement is expected to include U.S. security guarantees to deter further Russian aggression. Elsewhere, a U.S. district judge ordered the Trump administration to produce witnesses for depositions, provide records, and answer questions about the Musk-led Department of Government Efficiency. The lawsuit was brought by labor unions and nonprofit groups and seeks to block DOJ's access to systems at 3 federal agencies. A check on Dell shares in the pre-market. They are down by nearly 2.5%. Dell expects to ship $15 billion worth of AI servers this fiscal year. That is a 50% jump from last year. But despite that strong sales outlook, Dell also expects gross margins to decline 1% due to high hardware costs. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
The drugs come in through Mexico. They come, a lot of them, not all of them, but a lot of them come from China. And that's why we did that. It's 10 plus 10. So that goes on the 4th of March. And then on the 2nd of April, we have reciprocal tariffs.
We've got a busy month coming up and a Federal Reserve decision somewhere in between. Up next on the program, former senior Trump trade advisor Kellyanne Shaw joining Anne-Marie down in Washington, D.C. From New York City this morning, good morning.
plays on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
These scores so far this month, the S&P down 3%, the Nasdaq down by more than 4%, the Russell ugly. Russell 2000 down by more than 6 percentage points going into the end of February. Last session coming up, equity futures up by just 1/3 of 1% on the S&P. Under surveillance this morning, tariffs incoming.
The drugs continue to pour into our country, killing hundreds of thousands of people. We're losing substantially more than 100,000 people. I mean, dead. The drugs come in through Mexico. They come, a lot of them, not all of them, but a lot of them come from China. And that's why we did that. It's 10 plus 10. So that goes on the 4th of March. And then on the 2nd of April, we have reciprocal tariffs.
So here's the latest this morning. This is the state of play. President Donald Trump giving some more clarity on tariff plans, including 25% tariffs on Canada and Mexico next week. The president also adding an additional 10% tax on Chinese imports. Anne-Marie joins us now from Washington with more. Good morning, Anne-Marie.
Good morning, John. More clarity and more tariffs. That's the message from the White House. When it comes to this deadline on Tuesday, that pause for 25% on Canada and Mexico, unless they showed they were doing enough to stop the flow of migrants and also really fentanyl, then those tariffs go into play. And then the president really a spanner in the works, adding an additional 10% when it comes to China. So let's break all this down because the calendar is getting very busy on the trade front. Kellyanne Shaw joins me. She's now with Hochul Lovis, but she was a former senior White House trade advisor and negotiator under Trump 1.0. Let's just start with the calendar. March 4th, we have this pause, but the directive's already there. So unless they come out with another executive order, those tariffs on Mexico and Canada, 25% go into place. And then Donald Trump added an additional 10% on China. March 12th, 25% on steel and aluminum. April 1st, we get the whole report of where trade is right now in terms of reciprocity with American partners. And April 2nd, auto tariffs, reciprocal tariffs across the board. What are you focused on?
Can I say all of the above? It has certainly been a busy week from trade. And on top of that, we just got the confirmation of U.S. Trade Representative Jameson Greer, as well as the announcement after the Donald Trump and Starmer bilateral of a U.S.-UK FTA, which will be negotiated soon. So any one of these would be enough to derail a trade lawyer's week. And so we have all of these happening at once. So what I can say is I think the president is just gearing up. I think the calendar is only going to get even more full, especially as we get closer to that April deadline for all of those reports that are due. And I fully expect him to continue this trade train for the next several months and next couple of years.
How do you read the tea leaves right now when it comes to Canada, Mexico? Let's start there because those are coming into place Tuesday.
Yeah.
We have the Mexican economy official minister here in Washington, D.C. Yesterday met with Jameson Greer. Today is going to be meeting with Commerce Secretary Howard Lutnick. We have the Canadian fentanyl czar meeting with Tom Homan this week. Do you think these two countries are offering enough concessions for Trump to put out an EO saying the 25% will not go through?
Yeah, I mean, what I'm picking up are somewhat positive signals from both the Canadians and Mexicans in terms of how those conversations are going. However, it is very clear that what the president wants is a reduction in deaths related to fentanyl and cooperation in terms of the border and border security. And so what I think will likely play out over the next couple of days is a high-pressure situation in which the president is asking both Canada and Mexico for more so that they could potentially announce on Tuesday or Monday night some sort of suspension for an additional 30 days or period of time. But you cannot fix these issues overnight. I think it's going to take several months, if not years, to resolve some of these core concerns of the president. So my expectation is that best case scenario from the perspective of Canada and Mexico, we see another suspension that continues to get renewed periodically as these issues continue to be resolved. But I'm hopeful that there is that opportunity.
And then Tuesday night, he'll have his joint address to Congress. So potentially he can go in saying, look at all these concessions I got when it comes to immigration, which I was elected to really clean up. And that's the president's words. When it comes to China, is this additional 10% real?
I think so. I think so, because I don't see scope for the United States and China to resolve the president's core fentanyl concerns between now and Tuesday. I see Canada and Mexico here. I see active negotiations. They have a representative from almost every agency and every province of their respective governments. Those conversations aren't happening between the United States and China. Rather, I think some of those conversations are going to happen after April. That's when we've got the report on the phase 1 compliance. We have the report on the Biden administration's $18 billion of additional tariffs. And we also have that report on China's IP practices that are all due to the president with recommendations. And that's what I think is going to tee up a broader conversation that also involves fentanyl and some of these other issues with China.
So China responded overnight. And this is what the Commerce Ministry said. If the U.S. insists on having its own way, China will counter with all necessary measures to defend its legitimate rights. And then previously, though, in February, the response is we would take corresponding steps. So counter versus corresponding. What kind of reciprocal action could we see from Beijing?
Yeah, and I think you're seeing an uptick in the rhetoric in response from MOFCOM this time. I mean, 10% to 20%, you're doubling the tariff impact. I do think that both sides have an interest in not driving the relationship off an economic cliff before those talks begin after April 1st. But that said, China's going to have to respond. And we've seen that play out for the first 4 years of the Trump administration. I think we'll see that same pattern play out in these second 4 years, which is that for every action, there's an equal and opposite reaction on the side of China and the United States. So I do think we'll see retaliation. It could be more tariffs. It could be additional entities added to the unreliable entity list. It could be export controls. There could be a number of things that China does. But again, I think it's going to be fairly moderate in terms of their response because there is an opportunity to resolve some of these things in the short term.
You were in the room for phase 1, the trade deal that Trump did in Trump 1.0. What do you think he wants this time?
Well, I think it's not as clear. So during the first 4 years, what was clear to us as negotiators is that the president was looking for China to stop stealing U.S. technology, stop engaging in unfair trading practices, and stop subsidizing industries at the impact of U.S. exporters in third country markets. But what was challenging for us is the fact that China has a state-directed economy, and they're not going to back away from that. They're not going to stop doing some of these things that are so impactful for the United States. And so it's not really clear what the president is going to be asking of China this time. Certainly living up to phase 1, certainly help and cooperation on fentanyl. But beyond that, it's not clear what the asks are going to be on the administration side. And by the way, on China's side as well. They're interested in the U.S. backing off on export controls, potentially backing off on some of these national security measures. And I'm not sure there's really a runway there for both sides to land the plane.
If you were in the administration now and you were at the table negotiating this, does it help or hurt that there's a barrage of trade headlines every single day?
Well, I think this is just the way it is, right? I mean, President Trump, as you said, ran on immigration, he ran on inflation, he ran on tariffs. And so he's doing what he set out to do. And I think he only has 4 years to do it. And so to the extent he's looking to fundamentally change the global trading system and enact some of these policies he's been talking about for decades, even before he was elected president, all of that has to happen quite quickly. And so that's what I think you're seeing play out. And that's why I think this is going to be a very full plate for the next several months.
When it comes to the April 2nd tariffs, the Wall Street Journal this morning is saying administration officials are privately indicating that the full reciprocal action will take longer than April timeline to implement, up to 6 months or even more. So even if we get the direction of travel April 1st or 2nd, when do you actually think the tariffs, when it comes to the baseline reciprocal tariffs, actually come into play?
Well, I think it depends how they want to structure this legally. The president has a number of statutory authorities which he can use to impose tariffs, and he can do a reciprocal tariff, baseline tariffs, product-specific tariffs, supply chain tariffs, and he's talked about some of these over the past couple of weeks. And so he can do that through these Section 232 investigations, like we saw for copper just this week. He can do Section 301 investigations, which is the type that he used for tariffing China during his first term. And these take several months, if not a year, to complete. I think they can do them much faster than the statutory maximum of a year. But that said, it's going to be up to the team as to how they want to structure some of these tariffs. And some of them will be overlapping because they'll involve not just like the entire economy of a country or a universal baseline style tariff, but also very product specific.
Product specific. So it's going to be a very long list. Yep. All week we've been talking about Canada, Mexico, the United Kingdom, potentially a trade deal. He's announced yesterday he's going to be there. The European Union. What should we be looking at next? Where do you think he's going to target next?
Well, I think he's starting with North America. It's very clear. We have the largest trading relationships and trade deficits with Mexico and Canada. And I think China is going to be fast on the heels of North America. But he's talked a lot about Europe and his plans for Europe over the past several weeks as well. And so in addition to the major trading partners that he's mentioned, the U.S. Trade Representative issued a request for comments last week in which they specifically identified a number of countries that the administration is concerned about. Those include the G20 economies as well as countries with whom we have a large trade deficit. So I also have Vietnam on my list, I have South Korea, I have Japan, and I have India on my list as major priorities of the Trump administration throughout this first year.
Kellyanne, thank you so much for joining us this morning. Your insight, so useful. Jonathan, Kellyanne Shaw there. She was in the room during the Phase 1 trade deal negotiations, reading the tea leaves. What I take away from this is there is an opportunity before Tuesday for Mexico and Canada, given officials are in Washington right now, to potentially forego that 25%. But with China, it's going to be a bit more complicated.
Anne-Marie, appreciate the update. More from AMH later on this morning. Nobody really believes this is going to happen. And if it happens, they don't think it's going to last very long. That's a dangerous position to be in going into next week.
Especially if the market was supposed to ultimately provide a check on this president.
Up next on the program, Skylar Montgomery-Koenig of Barclays as Trump's tariff threats begin to hit foreign exchange.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg.
Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
We'll do it for fun.
Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Live from New York City this morning. Good morning to you all. Welcome to the program. Equities bouncing back. It's a small bounce. We're up by 0.4% on the S&P 500. This has been a tough month. On the S&P, down 3%. On the Nasdaq, down by more than 4%. On the Russell 2000, not even getting a bounce this morning. Down on the month by more than 6%.
And this really highlights how it's growth fears that are really underscoring the weakness, because you're actually seeing yields lower, and still the Russell 2000 is underperforming. There is a big question about whether this is just simply a momentum trade, and then there's an even bigger question about whether anyone is going to respond to it, be it the Fed or President Trump.
It's not a big move in the grand scheme of things, but you can really pick out various pockets of the equity market that speak to that slowdown in growth that people are worried about. Consumer discretionary down by more than 11% so far this month on the S&P 500. Lisa mentioned what was happening in the bond market. Big move lower in yields, down by more than 25 basis points through yesterday's session. The bond market at the moment looks like this. Across the curve, the 2-year, 10-year and 30-year just about unchanged. 10s at the moment, 425.20. If we hold these levels, we're heading towards a 7th consecutive week of lower bond yields on a 10-year maturity, the longest run going back to June 2019.
And it's for the wrong reasons, which is the reason why it's not supportive of equity valuations, is because suddenly people are thinking about slower growth. And initially it was just slower growth. But then yesterday, the word stagflation kept coming back to the fore. And I really think we need to sit on that, because the Fed officials who spoke are starting to actually refer to this kind of dual problem that they have of slowing growth, but also sticky inflation. What does the bond market do? And on a day like yesterday, where there was a huge drawdown going into the close, why didn't bonds rally more? And that, I think, is something we have to keep looking at.
Well, we've got to recognize the fact they've already rallied a lot over the last 6 or 7 weeks or so.
Make something with this.
But I'm with you. I'm with you. It's worth paying attention to. And that fuller quote that came from the Fed official, President Schmidt, on the prospect of stagflation, while the risks to inflation appear to be to the upside, discussions with contacts in my district, as well as some recent data, suggest the elevated uncertainty might also weigh on growth. And the Fed would have to balance inflation risks against growth concerns. That's a very different space, a different moment for this Fed to be in.
And it's one that keeps getting highlighted from a number of different guests who come on this show. And that's the reason why core PCE, the key inflation metric that the Fed looks at, which will be coming out in about 120 minutes time, is going to really be key in underscoring whether sticky inflation is still something that can dominate over fears of growth.
PCE, 8:30 Eastern time. That's the next stop. Let's turn to foreign exchange. I want to pick out 2 currency pairs. You can look at all the trade-affected stories, the euro story, China. I want to talk about dollar CAD, dollar MEX, because these 2 currency pairs have actually shown some strength on the other side of the trade so far this month. Very minimal strength, but strength nevertheless for the peso, for the loonie, at a time when we're facing down the very real prospect, apparently, of 25% tariffs on imports from Mexico and Canada.
Apparently doing a lot of heavy lifting there, because right now this market's not buying what the president is trying to sell it. And this sort of adding to a feeling of disbelief that this is going to go on. Mexico's president came out yesterday and said, I hope that we can reach an agreement on March 4th and we can announce something else. Canada's main negotiator comes out and say, we are quite convinced that the efforts we've made thus far should satisfy the U.S. administration. So on all sides, people are anticipating a punt, a pushback. The president himself seemed to do that. Yesterday sort of walked it back. a real question here.
Let's talk about China. On our radar this morning, China threatening to retaliate after President Trump announced additional 10% tariffs on Chinese imports. A spokesperson saying China, quote, will counter with all necessary measures to defend its legitimate rights and interests.
The concern here is a full-blown trade war. A lot of people saying that that's basically what you're seeing come out of the market with some of these currency pairs. There has been a somewhat measured response from Chinese officials, although they are saying that in response to the latest round of tariffs, the department will take potentially corresponding steps. In the past, China has not responded until the tariffs go into effect. So they have a wait-and-see approach. Still, this is coming right before their annual meeting where they set economic targets. It's something that actually will show whether there will be a full-blown trade war.
The president, when it comes to tariffs, has said a lot but hasn't done much. And the one thing he has done is put 10% tariffs on China. So to see that additional 10% come across again, not even a month later, was a surprise to a lot of people, I think, including the Chinese for that matter. I remember when Secretary Bessent was not Secretary Bessent, and he was sitting around this table as a hedge fund manager, and he talked about tariffs as a negotiating tools. Maybe you do 2% here, 5% there, and you just sort of ramp it up every single month and keep putting on the pressure. I'm not sure we were expecting them to start in the tens and then go another 10% and then go another 10%.
There is nothing about what we're seeing that's slow and measured and deliberate that gives anyone a sense of what the ultimate destination is other than higher. And I think that's the reason why people aren't taking it seriously, because they're putting a lot of work and emphasis on the negotiating aspect and not so much on a longer game that no one can really see.
Need to talk about foreign policy as well. The Ukrainian president, Volodymyr Zelensky, set to meet with President Trump at the White House later this morning. Zelensky expected to sign a deal with the United States to develop Ukraine's critical minerals, but questions remaining on whether Ukraine will receive security guarantees.
So really interesting to hear some of the walk back by President Trump, basically coming out and saying, did I say that about him being a dictator? I can't believe I said that. We're going to get along really well. At the same time, hasn't, as you pointed out, provided any security guarantees. Key question is, how much can Volodymyr Zelensky change the narrative against maybe doing a deal with Russia while excluding Ukraine?
There was a little smile when the president said that. I'm sure you noticed that. Yeah, a little wink, a little smile.
Did I say that?
I think he knows he said that. Let's turn to this story. What a story. Citi mistakenly crediting a customer's account with $81 trillion instead of the intended 280 last April. The Financial Times reporting the transfer was missed by 2 employees and was detected and reversed by a third. No funds left the bank.
So there are a lot of questions here. You raised the point earlier when we were both expressing disbelief over this. These numbers are not similar, so how do you this isn't a fat finger. I will say it shows the emphasis that's going to be on automating processes, because this was human error. This was manual processing error, and that is a pretty big mess up if you think about transferring $81 trillion. By the way, if you want to mess up again, I will give you my account number. Just contact me.
Try it out.
Yeah, let's see if it works.
This came from a Citigroup spokesperson. I should share their response with you. Despite the fact that a payment of this size could not actually have been executed, our detective controls promptly identified the inputting error between 2 Citi ledger accounts, and we reversed the entry. Our preventative controls would have also stopped any funds leaving the bank. So that's reassuring from Citi this morning. Fantastic reporting from the Financial Times. Let's turn to foreign exchange. The US dollar catching a bid as President Donald Trump's trade agenda weighs on some other currencies. Skylar Montgomery-Koenig of Barclays writing, the FX market is assigning too small a tariff premium. This in turn implies that we view pullbacks in the dollar as opportunities to re-engage from the long side. Skylar joins us now for more. Skylar, welcome to the program. Where do you think the tariff premium needs to be built up just a little bit more?
I think pretty much everywhere. Aside from this week, prior to this week, there was very, very little tariff premium baked into dollar CAD, in euro dollar, in dollar CNH. And I think that's because we've had so many false starts on tariffs. The deadline for Mexico and Canada has moved out once already. The market's betting that it'll likely move out again. And because of that, there's not a lot of tariff premium anywhere. And you've had fundamentals move in the favor of the dollar at the same time. And so the baseline that you're measuring what kind of downside you'd expect tariffs on versus has also moved.
I think, Skylar, that for a lot of people in this market, they're embracing a concept we traditionally relate to foreign policy, which is mutually assured destruction. There's just a belief that they won't go through with this because it would damage both sides so much. And I'm talking specifically about Mexico and Canada. Do you get that kind of pushback as well from clients?
Absolutely. But I think you need to be aware of the number of trade policies that are being put forward. So yes, maybe we don't get 25% tariffs on every import from Canada. There's obviously an awareness of that with the fact that they're only saying they'll do 10% on energy exports, which the U.S. is very dependent on. So there is an awareness of that, but you could get sectoral tariffs, and sectoral tariffs would also be impactful. And you could get little bits and pieces here and there. And the fact that you've got very little premium baked in means that even that needs to come to the fore. And I'll say, too, to not have any kind of premium, you need to either be sure that none of these policies will be enacted or that a premium is entirely baked in. And I think those are both very high bars that we're not already achieving, and that makes it quite hard to be short the dollar.
Skylar, you were talking about how maybe people aren't taking tariffs seriously enough and that more needs to get baked in. I was reading a Goldman Sachs note this morning that said that investors aren't buying the dip in stocks because of manic headline roulette. Why is, I mean, on the whole, maybe currencies aren't pricing in the chance that these tariffs go on. But why are they playing manic headline roulette? Why is the FX market the key barometer of risk and fear when it comes to tariffs, much more than any other market?
I think because it's not only tariffs that we're thinking about. Trump's policies across the board have a very clear directional aspect in FX. So fiscal is positive for the dollar, immigration policy in terms of it tightening inflation and leading to a more hawkish Fed, as well as tariff policy, they all have a very clear dollar bullish aspect to them. And so it is the easiest play. At the same time, we have these worries around higher yields in the US, worries about inflation. And so those kinds of bits and pieces that have less clear directional impact on equities, for example, that are also impacted by the strong level of growth we have in the US, means FX is really the place where Trump's policies are showing up the most.
So right now, Skylar, are you saying that tariffs are still going back to the playbook in the currency world of the U.S. being strong and everybody else getting hit harder? And the reason why I ask is because there's a shift in tone, at least in other markets in the U.S., which is toward weaker growth and potentially stagflationary trends. Why are we not seeing that more in the currency space?
Yeah, I think I'd give two reasons for why maybe tariffs don't affect the U.S. as much as they affect other places. The first is the U.S. is a more closed economy, so it's able to generate its own growth in a way that other places aren't. And so if the U.S. starts a global trade war, that means that all of those countries will have downside in growth, including the U.S., but the U.S. perhaps less so, depending on where it goes and how it's targeted. The second point is the U.S. is just less dependent on exports. So that means that if you have a tariff that's retaliated, there's less of an impact there. And maybe I'll finish off, too, by the fact that until, the last couple of weeks, tariffs were feeding into higher yields. And the U.S. has a less interest rate sensitivity than other places. And so if you have yields pulling up globally because the U.S. is rising, that has more of an impact negatively on these economies that have lower baselines for growth in the first place, but then are also more impacted by the fact that yields were rising despite it being triggered by the U.S.
Skylar, it sounds like you don't buy the argument that what Donald Trump is doing will spur other countries into action. I'm thinking of Europe in particular when it comes to spending on fiscal. Is that right? I mean, are you basically discounting some of the discussions around spending more on military and things that could prompt real growth and just real strength in the currency as well?
I think it depends on the scale of it. I'm not completely discounting it, but I think we've had this really big turn in the macro narrative in terms of U.S. growth worries coming to the fore and European growth worries kind of going to the background. We really don't know what kind of spending it'll be over what time frame. So, for example, on defense spending, our economists estimate that that adds 1.6 percentage points to GDP. That's a great number, but it's over 10 years. 10 years is a very long time to get that boost and for it to feed into the FX market. At the same time, Europe doesn't have the defense industry that the U.S. has. And so where's that money actually going? Is it going to be spent in Europe or is it going to be spent in the U.S.? So I have questions over these things. Yes, it is overall growth positive for Europe, but there's still a question of how much it feeds in and over what time frame.
Hey, Skylar, appreciate the view. Skylar Montgomery-Koenig there of Barclays. Not the only person with this view. This from Jordan Rochester over at Mizuho, just pushing this email out. Short euro dollar, target 102 by the end of March. The euro against the dollar, that currency pair at the moment, trading just around 104. Tariff risks are underpriced. We heard that just from Barclays. Tends to rally till 4:15, then data surprises to improve in the middle of March, 5% by year end on 10 still. So really a story of two halves for 25.
Keep your eye on the prize. That's what the word is from Jordan Rochester as well as Skylar just there. And they both nod to this idea of flooding the zone. Jordan Rochester talking about President Trump's attempts at flooding the zone has led to a lot of conflicting narratives that leave people just really tired. But if you look through that, tariffs really still are underpriced.
Been like a fire hose over the past few days, hasn't it?
Mental death.
Yeah, it's been amazing. Equity futures right now in the S&P 500 up by 0.4% with an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. China's military conducted drills in the Indo-Pacific near U.S. allies, testing the administration's commitment to region security. Australia, Vietnam, and Taiwan all expressed concerns over the exercises. The State Department said the U.S. will work to counter increased threats posed by its adversaries. Tesla is seeking approval to offer ride-hailing services in California. Documents viewed by Bloomberg showed that it applied for a permit late last year for permission to own and control a fleet of cars. Musk had previously said that Tesla would roll out driverless ride-hailing in Austin in June and aim to offer it in California by the end of this year. A check on Bitcoin. Its slide is deepening, down 4 1/3% this morning, now trading just above $80,000. Investors fleeing from riskier assets with renewed tariff threats. The cryptocurrency has hit its lowest level since early November and is down about 27% from its all-time high. Bank of America's Michael Hartnett noting that crypto assets saw a record outflow over the past week. And that's your brief, John.
Danny, thank you. Thanks for that. More from Danny in about 30 minutes' time. Up next on the program, the state of the consumer.
The incoming data is really strong, but how long time can we have this uncertainty about both consumer confidence being weak and also policy uncertainty being so elevated?
A real change from Torsten Slog yesterday on the program, saying if growth does slow more meaningfully, if the unemployment rate begins to go up, I do think the Fed will begin to put more weight on growth risk. We'll get the view of Greg Decker of EY up next on the show.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of the regulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.